Good morning, everyone. Welcome to the 5ers live trading room. It's Tuesday and we are live. Hope you guys are doing fantastic. I know I am. How you guys doing? We got Louis. Welcome. Unbiased Trader says, as of yesterday end, I am minus 1.5% on my 5ers bootcamp account. That's nothing. Low risk and consistent trading, and you're going to be back at break even quicker than you can say consistently profitable trader. All right. Morning, everyone. Today's Tuesday plus US holiday, so just trading DAX, taking one hit and just entered on a trade. Only 2 trades for the day. Good. I like that. Having trades around the number of trades that you're taking in a day. I think that is fantastic and a really, really great idea. What are we watching today? Ooh, I'm $35 from passing 5K phase 1. Well, I'm not going to do the math on that. I have no idea how close you are. I'm Buzz Trader. Good morning. Hand. Yep. Hand to yourself. Wave. Oh, everyone's waving. Cool. What am I saying? What am I talking about? Nothing. Let's talk about the markets. Let's go straight into the charts here. You know what? Looking at this one, it makes me a little bit depressed. Not depressed. Actually, you know what? This really makes me happy in a sense, because look at the move here on USD CAD, and we talked about how actually I did actually enter this trade. I don't know if you guys remember, but back in August, I mean, we talked about this trade ever since this summer. And if you guys know me, you know that I'm a technical analyst. I'm a trader using technical analyst, and I'm looking at the high time frames, and I'm trying to figure out um, the price cycles in the markets. And I do so by basically just looking at mostly looking at price, and then trying to add a few indicators to understand if there's any kind of divergences and things like that. But looking at USD CAD here, I mean, we can obviously see we got that trend line. We have that breakout. It comes down, hitting that trend line and that support. Downtrend, accumulation, breakout, reaccumulation, and then a move upwards. We also looked at this from a seasonality point of view as well. I went into Seasonax and I looked at this chart, and I saw that from what was it, September to the beginning of December, or the end of November. So from September to the beginning of, or the end of November, around the beginning of this December, USD CAD has been in an uptrend like 80% of the years, going back 15 years or 20 years, I believe. So there was a seasonality aspect to this as well. Now, I did enter this trade here, so I'm actually gonna show you this, right? So I did actually enter this trade here, and I had my initial stop loss below that one, but then I increased my stop loss, and I got stopped out somewhere in this range. All the chop, right? So I got stopped out here, and price broke out, and I traded that, made some money on that one, and then I got stopped out again. But now we're seeing that the move kind of played out. The move that I was looking for played out. And I've been thinking a lot about this because I've seen this happening all the time. We have, for example, the idea on USD CAD. It's a really, really great trade if I would have stayed in it. We also have the idea that I looked at. You guys know this summer I looked at USD JPY as well. This idea here. And I believe I started thinking about entering this one when we were testing that level. So something like this, and then actually looking for a move, up to this area. I'd say, somewhere between 8 and 9% move. That's the type of percentage gains that you're making in the stock market. And here we have is Forex pair moving, an insane amount of a pips as well. I mean, if we look at this from a pip perspective, we're talking about 150. No, we're talking about, but this is on a JPY pair. The pips are calculated incorrectly, and I'm not going to try to act like I'm smart and I understand how to calculate that to normal dumb people number like me. So it's a big move basically, very big move in the Forex market. I'm looking at this, and I've been thinking about this a lot lately. Like, the idea that who do you want to be as a trader? Because we all hear all the time we hear the idea that we want to find a trading strategy that is in line with our personality. So to understand that, we really need to understand like who are we as traders, and what are our personalities. And the type of trader that I want to be is someone that is taking it slow, looking at the higher time frames. But I do find myself on time frames that I'm not supposed to be looking at. I'm trying to welcome LJ.
Morning. How we doing?
How you doing?
Good to see everyone. Happy Tuesday.
Happy Tuesday. How are you today?
Go well. Feel sluggish. Got
Yeah,
a medication I have to take. It's a bit makes me feel
tired.
I don't know, sleepy.
Right.
Yeah.
Yeah, that sucks. How long are you gonna be taking that?
I don't know. It'll depend. I think like the current thing I have is like 2 months, but then it depends if I have to keep taking it for a while. So we'll see.
Right.
We shall see.
Yeah. You take some good trades, man. Make some money, and you forget all about that.
Yeah. Get into the market will ramp me up. Don't worry.
Yeah.
How we doing, guys?
So
Good to see
I
you.
we're I'm looking at a few setups here that I've looked at lately, and the thing where you go back, look at the charts, and you see an old setup that you looked at several weeks ago or months, depending on your time frame. So if you're a day trader, you might be seeing a setup that you looked at a couple of days ago, and then it plays out. If you only stayed in the setup, it would have played out, right? And then if you're a swing trader, you might go back several months and see that you missed a 500 or 600 pip move on a pair, and you're like, well, why didn't I just stay in that one? And I've been thinking about that a lot. The idea that just following the trend, following the structure that the market is trading in, and doing so from a high time frame perspective and a swing trader perspective. And that kind of goes back to the question that we all should ask ourselves, like, who are we as a trader, and like, what's our personality, and what do we really want to do? Like, what type of trading style do we resonate with? And for me, that is, cyclical moves in the forex market, looking at the daily, and maybe the really big moves, the moves that govern the primary trends, basically. And then
Mhm.
you'll have people like yourself, for example. I know that you're more into like mean reversion, maybe looking at the bigger picture, but trying to get into the small moves within that bigger picture, and kind of looking at from mean reversion type of way. So I'm trying to kind of like figure out, find that perfect balance. And what I've seen is I'm going higher and higher into the time frames when I start thinking like that.
Like up to weekly and stuff. You mean?
Now, mostly is, I'm kind of like understanding the strength of the daily time frame, because I feel like that's sort of like that's the anchor of everything. Because if you think about it from like a cyclical point of view, you
Hmm.
obviously have they have the seasonal cycle, where you have basically that's divided up into mostly monthly time frames. So you could have the bigger the bigger cyclical moves in terms of like human psychology. We can think about 1 year being a one big part of a massive cycle, right? And then you
Hmm.
can look at the months within that year as cycles or periods within that bigger cycle. And then if we go one step further or one step lower, we get to the weekly as a normal human cycle in life, where most people start their working week on a Monday, sometimes Sunday, but it's like Monday is the what most of the world starts their week with, and then it ends on Sunday. So Monday through Friday, or Monday through Sunday, if it's a crypto, that is a specific cycle. So that's the weekly time frame and kind of shows the weekly perspective of human psychology. And then you got the daily. And of course, as we know, 24 hours daily, that's an important cycle within that bigger cycle. And then going lower than that, I we're in a different type of cycle, because the daily is really the lowest you can go to keep with that traditional cycle, right? Sun
Mm.
rises in the morning, and it rises, and then it what?
Goes to
I'm
bed. I don't know.
no, it sun goes down.
Sun
Sunrise
goes
and
down. Yeah.
sunset.
Sunset.
It rises and then it sets. Okay, thank you very much for that English lesson. So that is like the shortest amount of like the human cycle, right? If we go lower into the daily, we have, the 12-hour, we got the 4-hour, we got the hourly, but that is, to me, something different. The intraday cycle is another universe, right? So do you understand what I'm saying?
Yeah, yeah, I get you. Like, yeah, you've got the overarching, prevailing, dominant sort of move, which is typically that heavier, large scale macro picture that ends up playing out. And then the interim between that is obviously, the chop of whatever's going on that day, that hour, news releases, data, all that kind of stuff. But, ultimately just noise in between the larger prevailing move. That's what you're saying, basically, right?
Yeah, exactly. And I'm trying to paint a picture of why, like, because it's easy to say, okay, the lower time frames, that is noise, but to understand why that might actually be the case. So I'm with that kind of like that theory of looking at the yearly, monthly, weekly, and daily as different parts of a bigger cycle, and it ends with the daily. And then when you go further lower into the daily, we're talking about a different cycle. We're talking about an intraday cycle. And my point of all of this is something like a theory that I'm working on is trend following is best used on the daily and higher, while mean reversion is best looked at in the intraday price action. So I think
Yeah.
that the noise or the cycles within the daily cycle, I believe, is best traded from a mean reversion type of perspective. Now, every trade, every price move is in a sense always mean reverting. It's always going to mean revert, even if it's moving away from the mean. You can always kind of know that the moving averages are gonna catch up, or the best fit line is going to take precedent over the overarching trend. So mean reversion is always there in a sense, but the trend following point of view follows that overarching theme. Even if you have a huge range, I mean, you could look at USD JPY here. I mean, if you're a trend follower, you are looking to. So this is on the weekly. If you're a trend follower, you're looking to follow maybe this trend to the downside, this to the upside, but they are all mean reversion trades back to the mean price. So you got a bounce here, looking to go back to the mean price of that one. And then this
Hmm.
one looks to go back to the mean price of maybe this line. And then you form a range, and the mean price of the range is this one. So every trend following strategy, in a sense, you need to know the underlying idea of mean reversion. So now I'm trying to work on a theory or a project where I try to create the framework for understanding what type of trader are you, and if you're the type 2 trader, you look at the daily and the higher time frames. And then if you're the type 1 trader, you are looking at the intraday time frames. And then you can be a mix of both. But depending on where you feel like you find the best fit for your personality, there is very different ways to look at markets and the way you're trading. So my argument is intraday traders look at mean reversion. high time frame traders look at more focused to trend following, because I don't think there's a framework for this. I just think that we just tell people that find out who you are and then trade based on your personality. And it's like, yeah, but how do I know what my personality is, and how do I know what type of trading style is aligned with that personality?
Yeah, I think I get what you're saying.
Yeah, I think I get what I'm saying as well.
I think I get it.
I think I get it as well. That's something I've been thinking about, and hopefully I can put it all into writing and add it to
Yeah. So like
all of
you
the.
take your personality, your way of sort of looking at things, what you're most comfortable with, what feels natural to you, and then how do you translate that into a tactical approach in the market is basically what you're saying.
Right, because there is this personality test. They have like Myers-Briggs personality test, right? And it gives you different types of personality based on different colors, and what type of personality are you based on the color you're getting from that personality test. But I haven't seen a trader's personality test. I would like to see how can you take a personality test like the Myers-Briggs, I think it's called, and then transform it into um, a trader's personality test based on the different cycles in the markets and what type of trading style is dominant in that trading cycle. Because there's a huge difference between being, a slow thinker, logical, slow, methodical thinker, looking at bigger moves and cycles, as compared to being a mean reverting short-term trader who doesn't care about the cycles, only looks at the possible mean price and a possible revert back to that mean price in the next hour or next day. Okay,
Yeah,
let's I guess
I get it. I
change.
see what you're saying. If I come up with any thoughts or framework stuff, I think I know what you mean now. So yeah, I
Yeah,
like
I
it.
would love. I would love that. I'm working on, and I usually do like on my morning walks. I do some brainstorming with ChatGPT and also Claude. I have do the kind of like conversation, and I'm working on this like database where I'm working on articles, and hopefully can in the future I can kind of turn that into a book
Yeah,
where it's like outlining my journey in trading, and then how it has transformed, from different trading styles and looking at different indicators, and then going into the style I'm trading now in a more of a holistic view
Hmm.
of trading.
That'd be cool. That'd be real cool.
Yeah. So I'm going to show you something, guys. I am short Euro USD. This is a trade where I've again looked at the higher time frames, and I've seen signs that we could potentially be in the distribution range based on price action. Now, it's important to understand that this is a technical trade where I've looked at Euro USD in the same lens as I've looked at on this trade on USD CAD and this idea on USD JPY. Because at the time of entering USD JPY right here, the consensus for USD JPY was to the downside. So I basically had two ideas: either go long or short down here when we break down. And there was a lot of discussions about USD JPY being bearish and the so-called true value being around like 128 or 130 or something like that. And I saw a lot of analysts talk about that. And I said, okay, well, I'm going to go with my technical idea. And then if that technical idea is invalidated, I have another technical idea to short that goes in line with the fundamentals. Same thing with USD CAD. We had a lot of analysts talking about the USD, the dollar being weak this year, and where we're going to see continued weakness throughout the year. Then it kind of shifted, saying that maybe we're going to get dollar strength into the end of this year, but that shift happened somewhere in October. So this move kind of already activated. Now, if we take that perspective and we look at Euro USD, there's not a lot of analysts out there that says, I haven't seen a lot of fundamental analysts saying that Euro USD is going to break down. I see a lot of the traders that I follow and respect are bullish on Euro USD. They're bearish on the dollar. So this is a technical trade. Although there are some fundamental reasons, like for example, there is, I follow a 42 macro, and they started talking a lot about there is a medium to high risk of a market correction in the medium, short to medium time horizon, which is something that they have a fairly good track record on that. And the reasoning behind that is a lot of conflicting signals. Basically, in the uptrend in the bull market, we had a lot of confirming indicators that the market is very strong, everything's very bullish. But now we start seeing some conflicting indicators. I'm not an expert in that, so I can't really go into details of what's the case on that. So that is a small confirmation on potentially this trade. But what I'm watching here for Euro USD is just zooming out. If we zoom out and we look at the weekly time frame, we have a few different market cycles and market basically cycles. So here we have Euro USD in a trending, a ranging environment. We get a trending environment. We have what is most likely distribution leads into a downtrend, accumulation, uptrend, potential distribution here, downtrend, and then a sideways trending market right here. A range breaks down, leads into accumulation, uptrend, and I view this as either a range, and this range can span here, is what I'm thinking. This could be a potential new range if there's going to be more, prolonged uncertainty in the markets, or we have distribution right here. And even though Euro USD is bullish, we can still have a primary uptrend, but we can have we can call it a temporary distribution or a temporary pause in the trend, where this becomes the range. We break down, and then we start potentially forming a new accumulation area down within this area right here. It still holds within the overall bullish structure, which is this one right here. It could look something like this. So that's the move I'm trading on the higher time frames on Euro USD. And if you're looking at this chart, this could be the 1 minute, this could be the 1 hour. It doesn't really matter, because the same principles apply. If you're looking at this on the 1 minute and you're seeing that the 1 minute range is breaking down here, and then we go into the lower time frames and we can look at this. On the 4 hour, we have that trend line, we have a break to the downside, and we now are retesting this level. So the question is, are we retesting support here? Or are we retesting the low of a range for a move lower? We have seen that it's been a lot of demand down here in the past. But if we come down and test that for the second time, it shows that the demand right now is not as strong. So if price comes down here for the second retest, I will most likely move my stops below that one or above this high, because it now shows that the strength of this demand, we can see here, strong reaction, move up, very strong reaction, and then move all the way up here. We come down. If this is strong demand, what we should see is price confirming this as strong demand by moving all the way up here, taking out my stops, and we should see increased volume, and we should see increased interest. We could, for example, look at this level breaking on increased volume and increased open interest in the futures market, for example, that would confirm that this is strong demand, because the market fluctuates between basically strong demand and weak demand, and strong supply and weak supply. And I'm seeing sign that this right now is weak demand, which is basically price hitting a support and not reacting as strongly as you would have liked as a bull. All right, so LJ,
Interesting.
what do you think?
I can very much see what you're saying. And very similar, I am looking at basically the exact same range through here, right?
Oh,
Now,
hallelujah.
yeah, and currently I am short euro dollar and I am long dollar yen right now. Though I will put
Oh,
an
you
asterisk
can't believe
to that.
how happy I am to hear that.
So the asterisk with that is sort of the conditions that we've had recently with the government shutdown, the increase in liquidity in the TGA, so the Treasury General Account, the roughly 250, 300 billion that has gone further into there because the government has been shut down, not paying out the dividends, basically the coupons from treasuries and such. Workers not getting paid, all the rest of it. So there's been a massive amount of US dollar liquidity that has not found its way to the market, and the market has been somewhat starved of that. So my trouble with it is if some of this stuff starts to open again, that liquidity comes back, markets turn the other way, and then that moves out of the picture. Similar deal with we've had, there's other places you can look for this, which I've got some charts here with like the SOFR and the Fed fund spread, so we can go over that shortly. But the Fed now is pretty much getting towards pumping out more liquidity, right? We're getting to this huge liquidity dump. We also obviously got Trump wanting to pump out the stimulus checks, right? If you get 2K going to everyone, that's a lot of money entering the system. So, for example, where was it? Okay, so this is where the COVID checks,
Wait,
right?
can you just update me on that, because that yeah, okay, so the checks, the COVID checks, and then the tariffs. So the tariffs dividend is that the $2,000?
Yeah, going to every US citizen, right?
Wow. So how
So
much do they get during? Wow, so it's bigger than the COVID checks.
yeah, so it's about
Wow.
1.7 times bigger than COVID checks. So
We're,
that's a
we're,
lot
go-
of money, right?
we're gonna have some weird stocks pumping.
Yep.
That's what we're gonna get. We're gonna have people go into Robinhood, open up an account, and just buy whatever's low, whatever's
Yeah.
cheap.
Yeah.
The dead companies that is about to get delisted.
Yeah.
Because let's face it, if you give everyone $2,000, there's going to be a lot of people out there thinking about trading, thinking about investing, and now it's going to be like, okay, I got the money, and I'm not going to do any research. I'm just going to buy the first thing I see,
Yeah.
and that usually what happens is it pumps the market. It pumps the market because people buy when they have money. When they invest it, they buy. Obviously, they're not going to invest it into a broker and start shorting, and it's most likely going to be in the stock market. So, yeah, that's bullish.
Yeah. So this is where, like, if we get, this stuff still has to be approved by Congress and everything. It is quite large, but given where the economy is sort of shifting, tilting to, it might actually be a bit easier to actually get it approved, because they'll be like, okay, we could actually use this. That's not a bad idea. It's coming from the tariffs, so fair enough. So it seems it shouldn't be that difficult to actually get past. But yeah, that's a massive injection of liquidity. Then between now, once the government opens, it should be about 150 billion odd coming back into the market of US dollars that have been trapped between now and end of year. And we've seen the starvation, right? So this is the SOFR, right? So SOFR is secured overnight financing rate. So this is basically, for any of you guys don't know what the heck this thing is, it's basically you can take assets like treasuries, park them with the Fed, and essentially get money for it. Now, as you can see, the rate in which you're getting charged has gone up. When this goes up, it's basically signaling there's not enough dollars floating around to facilitate the repos. So reverse repos. They're called repos because basically you park that collateral and then it gets returned back to you right after.
Is that what people refer to when they say stress in the repo market?
Yeah, correct. Yeah. So the repo market basically ends up being it's like the oil for the engine, right? It keeps everything functioning, moving around nicely. Just like a car, if you starve it of oil, it breaks. Your engine's gonna collapse and die. So you can see these periods back in 2018, 2019. This is when we had some of the taper tantrum and a bunch of other things going on. The Fed had to step in and basically fix that. This is COVID, spiked up initially. Then obviously we had the announcements of all the QE stuff, and they put out the all their tools to keep that nice and chill. Since then, basically, we've seen the spike here. Now, what does that mean? So with leveraged funds, right? So say you're a hedge fund, that kind of stuff, they will typically go and park this capital, right, with the SOFR. So they park it in the repos. They then get money back, and then they use that money to put into the market. So essentially, it's leverage. This is how they get more leverage, right? And what we're seeing right now is the SOFR rate should typically be below the effective Fed funds rate. Right now, SOFR is above. So the effective Fed funds rate is basically the lending rate between banks. That is an unsecured rate. This is with a secured asset against it. So obviously that rate should be lower because it's securitized, right? Right now we're actually seeing it above the unsecured rate, which is highlighting that there's not enough dollars going around the system. So hence we're seeing the movements from the Fed to basically put liquidity back into the system, get it all oiled up and functioning well. Now, when we've seen this shift from here, we've seen it pull back a little bit in the past couple of days. What happens with this is basically the more the stress goes up from the SOFR, it impacts leveraged assets more and more because obviously naturally hedge funds, that kind of thing, can't get leverage because they go to their bank. The bank basically says, hey, there's not enough cash floating around. We can't supply you the same leverage. So they're forced to delever. So things like options, meme stocks, crypto, all that kind of stuff gets hit much harder, as we've seen things like crypto, altcoins, all that get whacked. All right, so as this comes down, those things will perform better overall. Right. So the other thing with we've seen in options, the options vols and stuff have also come down, and they're being quite low. Options are effectively a leveraged asset. So as that eases, you'll see more of this liquidity and dollars coming back into the system. And then so hence my trouble with those trades that you're highlighting, Jonatan, is I can see dollar liquidity just waiting to be unleashed across the board. And this is an example of BTC performance once you get that sort of flip. Right, so from here, we should then start rising up in BTC, another leverage, high beta type asset. Right, so across the board, that's what we should be getting. That's for later. But yeah, so that's my only trouble with the direction of that. I think even the dips that we've recently had are a bit of a outlier. They're kind of just because of those specific happenings that have gone on with which, without the government being shut down, we might have ran the other way, right? So
yeah, and looking at looking at the S&P 500, we can see that obviously the trend is very much alive, and there's nothing wrong about this trend at all. I would say that it's a very it's actually looking very healthy. We can see that on the daily. We came down and we had this move down, broke this level. The whole market became extremely bearish, as always, as we always see on moves to the downside. This one, the market panicked. This one, the market panicked here as well. And then, of course, we had that one, it's huge move right here. And then, of course, April, like the market just panicked. And that's just how it works, right?
Yeah.
Prices go down and people kind of panic. And then, of course, the media capitalizes on that panic because that's what people want to read. But we had this daily candle tells us a lot about what we need to know. And then the gap up on the next candle. This is actually very, very bullish because we have this. Let me see. Okay, so this kind of looks like it's a long leg doji. It tells us that there's doji where you have indecision. This tells us that there's not really a lot of indecision here. There's indecision where buyers and seller might want the price to go on the next candle because we had an open and then we closed around the same price. But the fact that we have a long wick to the downside obviously means that the sellers started the session by selling, and then the buyers came in potentially on new information and closed it higher and kind of bought it all back. But we had that indecision with the opening and closing being quite close to each other. But then the fact that, so this is on a Friday, and then the fact that we gapped up means that there's new information, new bullish information over the weekend. We gapped up, and not only did we gap up, but we confirmed this move by closing and breaking structure on the 4 hour, breaking above that trend line. This is very bullish. So as long as we stay above this level, the trend is very much alive. I believe that we might very well continue in this direction for the foreseeable future.
Yeah.
The AI market looks bullish. The bubble is alive, right? The financing is the circular deals are still happening. Doesn't really seem to be breaking down, and the evaluation fears seems to have calmed down. We basically had it was
Michael
only really
Burry.
one company, right? It was
Yeah.
Michael Burry as well, but I mean, he's also hedging. I mean, we don't know if that's a bet to the downside or if it's a hedge.
He's always often very, very early,
Yeah,
all the
he
time.
started shorting the housing market. It was like a year or two before it actually collapsed. So, and then like we also have to remember, people say some things like, "Oh, Warren Buffett is selling all his stocks." So Warren Buffett is selling all his stocks. That's a bad sign. We got to get out of the market. That's one person. That's one person. Yes, it's a massive, massive company, massive, billions of dollars. Like, really, can't really move the market, but still, it's one investor. Michael Burry is also one investor out of millions and millions of market participants. So this is, I believe, things like this is not the things you should be focused on. You shouldn't be focused on what one individual is doing and what the media writes about that. If Michael Burry shorts Nvidia, we don't know if he's shorting Nvidia because he believes the value of Nvidia is going down, or if he is playing some type of hedge because he is only required to give out these numbers because of the size he's trading. He's not going out and saying, maybe he has because he talks about crashes quite often, but what I'm saying is, you look at Warren Buffett. The reasons for the reason for him to kind of sell this market might just be that he's getting old and there's a potential transition happening within the company, and also he doesn't understand AI. So there might be a case with that. Instead, what you should be looking at, I believe, is the overarching theme that the economic indicators are showing us. We have a question on actually two questions I want to cover here. So first, can you explain what a trailing stop loss, how that works? It's a very simple process. Is you have a trade where you might, let's say, you enter here, and then you have a stop loss that is let's say 1%. So you see right here, that's 1%. So if you set your stop loss at 1%, obviously if you enter here and price moves up like this and then down, you're going to get stopped out, right? But if you have a trading stop loss, this 1% and the stop loss will follow price up. So when price moves up, it follows like this. It never moves down. So it follows like this, and then price moves down, and then it moves up, price moves down, and then it moves up, and the price moves up. And then when it moves down, you're going to get stopped out here. So the trading stop loss is just a stop loss that is following price up at a set distance, but never down. So when price moves down to hit the stop loss, you're out. A trading stop loss is... I don't think it's a very good thing, because I think it's better to actually base your stops on technical invalidation areas of the setup, and that changes with time. So I don't think trading stop is a good thing to automatically have. I would argue that to manually change your stop loss based on the price action levels or the indicators is better in my opinion.
Yeah, you can get stopped out on false moves just from a gyration spike of a headline or something like that.
Exactly, because why do you have a stop loss? You have a stop loss to protect you from when your idea is invalidated, and your idea is invalidated based on structures and not specific pip moves, unless you're trading a quantitative systematic EA. Then absolutely you might have seen that as soon as price moves 50 pips against your position, you're always better off closing the position. So that might be a better use case. But from a more discretionary manual trading way, you should definitely I forget what I was saying.
Yeah, do it manually. Monitor and manage the stop manually. Probably.
Yeah. Okay, we have a question here as well. Let's see. Marcus says, I haven't seen any quality trades this week. I am sitting on my hands waiting for the US lockdown to be resolved. Retailers 69% short whales, net long on buy. Okay, so you're talking about the commitment of traders report. That's a tricky one, I think, because I think
data also hasn't properly come out because the government shutdown. It's all distorted.
Really? So, okay.
Yeah.
Commitment of traders report is a tricky one because, from my understanding, it's only really commercials you want to focus on, because that's the smart money, right? You might want to look at the large speculators. They're most likely CTAs, trend following funds, and that sort of thing. And then you have the small speculators, which is most likely something you're going to be looking at from a contrarian point of view. But the what we call the smart money, or basically the smart money, is the commercials, because they are the producers. And let's say, for example, the futures market in I don't know, gold. You might have commercials being the gold miners and things like that, and they have a very good fundamental knowledge of the gold market, and they are hedging their positions based on where they think the market and what they need to. So that they have a very good fundamental knowledge of the gold market, because they're actually the producers and the bigger users of gold from an industrial point of view as well. So, but the problem I see with the commitment of traders report, it's released on a Friday based on Tuesday's reporting. So it's always going to be delayed. So can you trade on that as a day trader, as an intraday trader? I don't really think it's very valuable information for you as an intraday trader.
So yeah, you have to take it with a lot of curation. Yeah, like Jonatan said, it's the Friday from the last Tuesday. So, for instance, if there's a week where, you got the Fed on Wednesday, that's going to completely change everything from the prior positioning, right? Right now, most importantly, because of the government shutdown, the CFTC is affected. So there's been no report for weeks now. So any data that you would be looking at is old data pre the government shutdown as well. So, yeah.
Okay, so we're gonna get this one, Marco. Yesterday, Euro USD D1 daily candle bearish. I will try short when 1 hour RSI downwards are overbought. Okay, so you want to short? Okay, so that's actually interesting. Let's take a look at that. So we got yesterday's candle is bearish. So yeah, yesterday's candle is bearish, and not only is it's bearish, this is a pretty common. This is an indecision candle, sort of like a. Some type of doji. You can look at you have the same type of example here where price moves up. It has momentum slowing down, and then you get increased velocity and increased momentum to the downside. And a lot of times it's kind of like you can look at this from as a rocket ship kind of leaving Earth and then going into orbit and then returning back into down to Earth again. So you get a rocket ship right here, and then you get like increased velocity and acceleration, and then you have decreased acceleration when it's in orbit, and then it's coming back down to the launch pad with increased momentum, right? And a lot of times what happens when that rocket ship is entering orbit, about to turn down, is you have indecision, because now it's like that rocket ship is just up there and kind of not doing much, and the market is indecisive. And then a lot of times that's what you see before a downturn in a slowdown in momentum, and then a reversion on momentum. And that's why you're going to see momentum indicators move up and then move down with price. And a lot of times you see momentum indicators is actually a lot of times you are a lot of times seeing on the momentum indicators it's showing a decrease in momentum before you can a lot of times see it easily in price. You have also the same thing kind of happening around this area as well. So that's one thing that I like about this short, the fact that we had that indecisive candle, and as you can see, we can have a bullish candle after that as well without really destroying the setup. And the thing here, the daily is bullish right now, very bullish. But it's not confirmed until 11 hours and 30 minutes from now, so we're not going to get a signal based on that. This is a single candle pattern, which means it is not confirmed until the next candle turns bearish and preferably below the wick of the previous one. So let's look at the comment here. 1 hour RSI downwards are overbought. Okay, so let's look at the 1 hour RSI. So the 1 hour RSI, actually, we can look at most of the momentum indicators right here. And let me quick question for you, my friend. Where are you? Who is it? Marco. Why the RSI? Why the RSI? Why not the MACD or the stochastics or the why the RSI? Because that's an important question. Because hopefully you know why you're using the RSI. So why? I think that if price breaks out here on the 1 hour, if price breaks out here and the RSI goes into overbought,
I can see us going up to 116.20. We're seeing quite bullish right now.
Yeah. So in an uptrend, in an uptrend, RSI being overbought means a strong uptrend, and momentum traders, you're supposed to be buying when the RSI is overbought in an uptrend if you're a momentum trader, because that means that momentum is strong. It's not until the RSI goes back below 70 that it has a bearish signal. So if price moves up and RSI gets into overbought, that means that if you're a momentum trader, you buy. And then if the RSI crosses below 70 again, now that is a bearish signal. If you're in a downtrend, you want to be shorting when that cross happens at resistance. But again, if you're in a downtrend and it becomes oversold and it stays down here, momentum traders shorting is going to be adding to the position at this level. Look at this, for example. Price comes down, RSI down here, and the trend just accelerates, and RSI stays around the oversold area and accelerates, and then down here where you have, and this is the true value and true strength of these momentum indicators. You have a divergence, and the divergence on the momentum usually happens before price. So here you have a downtrend in price at support, and on RSI you get the shift in trend right here, and so that's kind of like that type of signal. So I would argue I wouldn't use the RSI in that way. I think the RSI.
It's very hard right now. There's so many things undecided as well with like the government shutdown, right? If we open, today or tomorrow or by Friday, what's the direct impulse from that?
I mean, looking at price right now, looking at price right now, I'd say that I'm not very comfortable in this short,
Yeah, that's what I mean. So, yeah, because it depends if it's like, so sort of the risk on element, obviously that'll come through across the board. But then as far as currencies, as far as like the dollar side of things, do then people look towards that unloading of liquidity coming back in, so therefore dollar down, therefore euro up, or is this US dollar positive in the initial instance now that that's out of the way, right? As like a knee-jerk flash move to reverse. I think that's the thing I'm struggling with right now as well. I've been back and forth long and short euro dollar today. Yeah. I don't like it. It's very, very mixed this week so far.
Yeah,
because of these things. Yeah.
And I think that mixed signals are almost always bearish because in indecision, mixed signals, the market not being in equilibrium, or there is this idea that one-sided markets are always bullish and indecisive markets are almost always bearish. You can enter a range or a bear market on indecisive information and fear, but one-sided markets are almost always bullish. Which kind of doesn't really make a lot of sense, because then you're thinking, but what if it's a one-sided market to the downside? Well, bear markets are short, right? They're one-sided at the bottom a lot of times, because when everyone kind of please tell me what that word is.
Capitulate.
Okay. Wow, that was difficult for me. I feel like my brain damage is coming through here on the live stream. Please do not make a clip of that. That was hilarious. Okay, so yes. Well, what was I gonna say? Yes, RSI. We had a comment saying you're using the wrong RSI. Yes, exactly. Brain is not braining. So you go into trading view and you write relative, and you go into relative strength index. This is the right. Well, this is the indicator, right? You have oversold at 70. Overbought at 70, oversold at 30. And then we have another comment saying that I see you're using an indicator on your indicator. So this is a moving average of the RSI. So it's not just an indicator on the indicator. This is the actual RSI. So if you go into settings, you'll see
I was
that
gonna,
the
yeah, it depends. Yeah, it depends what settings you have on your RSI, because what he probably means is not the wrong one. He probably just has different base settings, input settings on.
right. So you can modify the RSI, but this is the original, like when the RSI was first created, the first version of the RSI was this one right here, and then you can of course change um, the moving average. But basically, the RSI looks at momentum, 14 candles, the 14 candles back, and it's based on the closing price. And then the moving average is also a 14 simple moving average of the RSI line. So the moving average is not looking at price; it's looking at the RSI. And then it takes a 14-day average of that. Now the idea is that it acts as a signal. So when RSI goes above the moving average, it means that momentum is now crossing above or below its 14-day average. So it's sort of a signal. Now you can adjust this to have a shorter moving average. And if you're going to be playing around with this, I would recommend going with an EMA and then starting with about 9 and trying to see where price comes and goes low, like into the. So, for example, if you're looking for longs, look for price to get into the oversold territory right here. So going below oversold and then back above oversold and the EMA, and that would be a signal on the momentum. Now you can see that momentum does pick up, but price is not picking up at all, but you do have a.
But then you've got divergence on the next. Yeah.
Yeah.
And
So
that's really the way you want to do it. So you want divergence on the actual indicator at the same time as you're seeing price actually come lower. But then the indicator is showing a higher level, right? And then hence that's price action you're seeing and the indicator diverging there.
Yeah, so that's, I think, very simple. Momentum indicators are best used for finding divergences. This idea that an overbought market and an uptrend needs to be sold is something that you learn in your first week as a trader, because everyone's like, oh, the market is oversold, and you're like, oh, oversold, that means that we should be buying. Or when it's overbought, it's like, okay, it's overbought, that means it's people have bought too much of it, so we need to sell. But the words, if the RSI was created today, we would most likely not use the words overbought and oversold, because that's not really what it means.
Yeah. Because it depends on the speed. That's why it's, relative strength as well, right?
Good morning, everyone.
How are you doing, Pedro?
Good morning, everyone.
How are we going?
Pedro.
How are you guys doing?
Doing all right. I'm very very chill, very relaxed today. I don't know. I feel very just
It's good,
mellow.
man. Is
Yeah.
it summer there, right? In Australia now?
It is. It's a bit warm.
Nice.
Yeah.
Yeah, man. Enjoy it while we can.
How you doing over there?
Oh, good, man. It's autumn. It feels like winter already sometimes. It's quite chill.
Nice.
Quite chill, but it's good. It's just mostly rain, as always in the UK. Raining all the time.
Yeah, fair.
And that's it.
It's been raining a lot here.
Yeah.
That's why it's bad in summer. Like, because it's the humidity that kills you, right? Yeah. So.
All right, what you guys are looking at?
Well, I'm looking at the door because I'm gonna walk through it because I'm gonna leave you too, and I will be back a bit later, and then we're gonna have Richard and Will, and then we're gonna have Griff coming on later as well. And then, as always, we're going to have Victor as well. And I think I might have a spot later as well. So I will see you guys in not too long. Take care.
Wonderful. See you, man. Ciao.
Ciao, ciao. All right.
Take over to my screen. I'll show you what I'm looking at. So, got an eye on euro dollar at the moment. On this initial spike earlier, I took a small trade through here. It was a short to see if we get momentum from this actually driving lower. That was as dollar yen at the same time was starting to break up. That then stalled out there, so I took a trade on dollar yen earlier as well. Basically got capped. This top side level we've sort of tapped into a few times now. We're sort of struggling to get through there. So I was waiting to see though if we might get some kind of break, punch through there, and then obviously that accelerate euro dollar down. And then of course we had the pound news earlier, and we've pulled back into the underside of this trading range. So before with that, I was looking to see whether euro dollar collapse, dollar yen higher, and then pound dollar off to the next sort of zone down here. But now we're sort of running to the upside a little bit and sort of testing this, I guess, kind of like triangle wedge type formation that we've got here, and sort of starting to punch to the upside. So we're talking about euro dollar just before with Jonatan. So I can see if this sustains a higher run on to about 116.20. So that's what I'm looking to see right now, if this actually gains traction or if this is just a bit of a, just price chopping about and no real impetus behind it. Apart from that, there's also NASDAQ. I'm in a NASDAQ short right now. We've got this sort of band through here. We keep price keeps coming into and getting knocked back from. So for now, I'm sitting short through there for the meantime. But overall, as Jonatan and I were saying, the market's a little bit indecisive right now. We don't have a exactly clear pull one way or the other. So, but yeah, that's pretty much what I'm looking at myself. So, what about you?
I'm a bit on the same side in terms of the indecision on our pairs. Now last week I was indeed looking for that potential turn on the dollar, and then move to the upside on the euro, and pound, and so on. I think I already mentioned that last time I was here on Thursday. Now I'm curious, because we did manage to break what I can see here on the higher time frame is that we did manage to break slightly this top on the dollar, which maybe it's one of the most recent important highs that led to the nearest low that was created. So I'm curious to see price as on the intention to continue to move a little bit more to the upside. We are still within this 100 basically dollar mark, which in the past has worked really strongly as either a support or resistance. Even this event here was already a touch on the 100 mark. So to go kind of confirm that actually price does want to go even higher, maybe it would be nice to see a proper break and stay above maybe the $100 mark to then go into the upside. But if I was looking at technicals in this case, this for me would be a little bit of an engulf to the upside to show indication for the future on the dollar. When you're looking into the lower time frame, we did have also a small break of this most recent structure in here, even if it's just 1 point, but we did it, which means that so lower time frame I kind of more a bit into the bearish side, higher time frame maybe a little bit more to the bullish side, and if I even go into weeklies and so on, then I'm still even more bearish as well, because I think price even you can even go a little bit lower. But if I just look at that, the most recent structure, I would go higher, but before that I could go lower, at least maybe try to feel something into this structure, which maybe takes us on the euro dollar to that 116.20 that you mentioned. I think something like that. So what I would have liked to see actually the dollar maybe to go a little bit higher, to then try to look for a short on the dollar, and basically the opposite, maybe price on the euro, on the pound to go a little bit lower to try to capitalize a little bit on some longs, or maybe price will just continue to hold this. I'm talking about the dollar index, maybe continue to hold this supply level and find short from here without even retracing back in here. Because we do have a little bit of this gap, which I was hoping that we could fill it. I was hoping even after breaking this low that price would go a little bit deeper and then drop. That never happened. Price just went again, took another low, and maybe just is going to continue to respect this mid range instead of going a bit more close to the extreme. But you can definitely see that there is a little bit of indecision on the dollar. Maybe the lack of news has been a big factor on that aspect. But you also can see the good recovery that we had since mid September. Basically, since we had the first cut rate from the Fed, so we saw that shift on the dollar. Looking at the euro, it's kind of similar, even though the euro is struggling to go a little bit higher. So we'll see. We'll see if it's going to actually go to that level that you mentioned, around 116.20 or not. It keeps holding also this level here without managing to go below it for a while now. Yeah, so we'll see. Overall, yes, I would prefer to see euro dollar to go a little bit deeper before actually going for long. That's kind of what I was waiting. Didn't see that happening. And prices went up. Now I'm waiting. Just to see what price will do. I'm not going to be involved in any move at around this level. Looking at the euro index, it just continues to be within the same range. So there's been kind of a pattern, basically, literally the same thing as trading a range, try to sell at the tops, buy at the bottoms, and we have seen that reaction then reflected on the euro pairs, either euro dollar, euro Aussie, euro yen, or euro dollar, or so, whatever. So let's see if price is going to find more selling pressure once it gets close to this top, or if eventually we're going to break this to the upside. It has been stuck within this range for quite a while now. As you can see, all the way almost from August all the way till now, without really managing to go anywhere. So using this as a reference on the euro index can be also interesting to find when to potentially look for shorts on the euro pairs, or at least as a confluence. One pair that I really wanted to short and I didn't manage, it was the dollar franc Swiss. Unfortunately, I think dollar franc Swiss was reacting quite nicely from a good level after moving to the upside for a while. It never retraced, similar to dollar index, never really come back into this top again. So I end up missing it. I kept respecting this mid-range in here, and now may continue to go a little bit lower. Dollar franc Swiss actually already managed to break this level, so dollar franc Swiss looks like it's leading when you're looking at or comparing with euro dollar and some other dollar pairs. One pair that I was actually starting to look for potential longs is on the New Zealand. I think New Zealand is getting closer to New Zealand dollar. These guys, I think, is getting closer to some interesting lows. So I'm going to pay attention to see if there's any type of opportunity. Not yet for me. I think price can go a little bit lower, but I'll be tracking it to see if there's going to be an opportunity in the next days as price keeps getting closer to this low. So maybe that's going to be a potentially good opportunity to the upside.
Yeah, I like that. Yeah.
From these lows on New Zealand dollar, yeah, I'm looking at this one. Opposite to the Aussie dollar. Aussie dollar is way higher at this point, even though it's also close to kind of a range lows at around this level. So maybe similarly may go higher, but you can see the difference. New Zealand is basically here. Sorry. New Zealand is basically here, or getting really close to here, and Aussie is way higher at this point. What else? I think FX is most, of course, the yen pairs, right? So I've been tracking the yen pairs. I think the yen index, it can still go a little bit lower. Last week we mentioned it. Some of you guys actually managed to catch a short on dollar yen. I hope you guys got your target last Thursday, if not mistaken. But overall, I think yen index can still go a little bit lower. Maybe get closer to this left show. This is basically a quasi-model pattern that you maybe can look at, and maybe there's a little bit more of structure that eventually can move. Now on the lower time frame, we are indeed breaking a little bit of some structure in here. Maybe if you still have a trend line and price keeps holding. We are once again really close to these lows. I think price could take these lows once again, which maybe takes dollar yen a little bit higher, euro yen a little bit higher, some of those yen pairs a little bit higher before you find new reversals or new shorts on those yen pairs and then move to the upside on the yen index. But I think it's going to continue to provide interesting moves. Even if you do take these lows, just wait again for another move, and they're going to be able to capitalize on moves like this for the next days, weeks, which means kind of looking for shorts on the other yen pairs. That will definitely be a play I'll continue to look for until I don't know, until the end of the month, until the end of the year. Whenever we have these moves, I think there's going to be quite opportunities on the yen pairs. Especially for me as a reversal trader, I think we're going to have those type of moves. So then you combine this information into the individual yen pairs. It's basically that, right? So we are looking at the dollar yen. So some of the guys actually managed to catch this move. So congrats on that one. As price continues to go a little bit higher, maybe take this top, maybe can find a little bit of a selling pressure. Of course, for dollar yen, the dollar needs to help. We need to see a little bit of weakness on the dollar for dollar yen also to move to the downside. Otherwise, a benefit from maybe the euro yen or the pound yen to look for that. But I could see dollar yen going a little bit higher. It's struggling to break now this level, but I think it's going to go a little bit higher, and eventually can even go close to maybe 156.7, and maybe from there you can have a bigger sell-off. Of course, the dollar needs to help as well. Otherwise, we can maybe look at the euro yen, which is again close to the highs. It will a little bit this range, but when you're looking into the higher time frame, we are getting closer also to an interesting supply level, and you may have a little bit of that reaction, or even if you take this top, then after that for sure you're going to find some more selling pressure. So the yen pairs are going to be definitely on my radar all the way until the end of the year, as it continues to go higher and maybe finding new selling pressure. So that's those are the ones in terms of effects mostly that I'm looking at. And then of course we had the big recovery. I was really close to hit my target. I didn't close my trade yet on the Dow. I've been looking and waiting for price to basically retest this trend line all the way from April. We touched here, we touched in there as well, and I was looking for price to go there. I'm always telling everyone to not place their targets below the structure, and I did actually place my target slightly at the edge of the structure. So price got really close on Friday, and all of a sudden, next time I'm in the charts, price is already all the way back into here. So this now changes a bit. I need to find out how am I going to manage the trade now, because the remaining of positions is like 20% of the position that I've opened, because price already went to the level that I wanted. So I was kind of confident until price got there, but now that price got there, it reacted from it. Now I think I need to manage manually and maybe close. Hopefully price goes down a little bit, maybe just close it and not expect price to come back in here again. But good reaction on the Dow. Maybe this level in here can still hold price down, this kind of supply level. Let's see. Otherwise, price will just go. Again, this is the situation that, as I think you mentioned also, that maybe the government is about to reopen. And I think that was one of the reasons maybe for price to have this V-shaped recovery on Friday. And maybe today is going to continue. We'll see. And quite similar also on S&P and the NASDAQ in general. Not a bad reaction when S&P reacted from these lows. We'll see. We'll see what will happen. Are we going to challenge the tops again? For example, S&P already broke the trend line. I think on NASDAQ we are still maybe at around the trend line in that zone that you marked somehow. So is the S&P leading already? Kind of break trend line and now go challenge the top again. We'll see. We'll see how much enthusiasm kind of the market's going to feel after the government reopens, and usually end of the year it's quite optimistic in the market. So that's basically that's what I have on my radar at this point. What do you think is going to happen? Do you think that the US indices are going to go all the way to new all-time highs, or going to find a little bit of resistance and trade around these levels for the time being?
I think we will get up once the government opens up. There'll be all that stored dollar liquidity that's been trapped, sort of flooding back out, right? We'll get more of the data coming through. We've obviously had the Fed, Jerome Powell, that kind of stuff saying, they want to see the data and make sure that's all confirmed before they cut rates. But if we go and look at some of the pieces with that, I mean, inflation incredibly low. They've got every reason to still cut. So obviously it was as we'd spoken about the past couple of weeks, where the market was pricing it at 90+%. That was definitely too high, especially with the shutdown. Jerome Powell came out and pretty much highlighted that. We're still pricing around 60%. So I think they still will cut once we get there. But that number definitely needed to come back. So I think at some point we get stuff open, some of that data comes through. We won't get those pieces this week, I doubt. Like we're meant to have inflation, that kind of stuff. If we do, they will have had to impute a lot of the data. So it won't be high quality because there'll be a lot of assumptions, that kind of stuff, because obviously no one's there actually at work compiling all the data. So even if we open in time, we won't quite get that. So a lot of these pieces will be coming through next week, etc. I think once that sort of starts to indicate that, yep, the Fed is A-OK to go ahead with cutting, market's right back up. So I think there will be, we won't, I don't know if we'll get the storming Christmas rally that it looked like we might. It might just be a bit more of a gradual bubble up. Because I think as well, a lot of people made some pretty good returns. You want to take some money off the board, close up shop for the year, go home, cool. So, and definitely agree with everything you're looking at. And like Rick was saying here, bank holiday today. So as far as the current piece for, this is 15-minute on the Dixie, we seem to have this, sort of structure coming through here. So I'm looking to see if this actually breaks down through this lower band, or if this is the turning point, we run back up. And just like you were saying, if we manage to pop through here and come to some of the highs up there on the Dixie. So hence that would be euro dollar stalling out here. This is a bit of a fake out. We then come lower in somewhere below, and then dollar yen, hence shuffling higher. So if we start to see that, I'll probably re-enter dollar yen through here, stops just below, and then look for us to break into that high range up towards 155. But yeah, that's about it right now. I just wish the government would open already. So,
are you going to get all those
some
missing
direction.
data back, or are you going to get all those missing data back, or like you can forget about it? Like NFP that we should have had like last week and we didn't, or 2 weeks ago already. Are you going to get out any of those data back or not?
I think there'll be some of it that was sort of completed in time or part completed. It's going to depend on how much of the survey data was actually collected, given the government was shut down, because now we've seen more and more people completely not turning up, right? And then there's some people like, say like you have the first week of the shutdown, that kind of stuff, people still turn up because they're like, maybe everything will go back to normal or wrap up what was going on before, etc. So we'll have to see exactly how much data is being collected. Because just, not enough hands at work to go and collate everything, right? But yeah, so there'll probably be some pieces that are more clear, more reliable. Others, like I was saying, like with the inflation data, they're going to have to impute a lot of the costs and the input prices. So hence it would be kind of like seasonally adjusting, right? They'll make a lot of assumptions into the data. So yeah. I might just jump off for a sec. I just got to pop to the bathroom.
Okay, go ahead. Let me just stop the mine. Yeah. We had Bobby Fischer here. Hi, Bobby. What target are you looking at on euro dollar? So you mentioned that you are long from 115.532. So basically that's around this level, 115.532, somewhere around here. What target would you be looking at? Are you looking for price to go and run these highs? Are you looking even higher? Are you looking within the structure? What are you looking at? So as you could see, LJ is looking into this kind of triangle that potential could fake out and go down, or maybe it holds and the eventual price can go a little bit higher. We also had Mark Cox kind of mentioning quite correctly that if by any chance the government reopens, maybe that can be a positive for the dollar, which then, of course, as a consequence, the euro could go down. LJ and myself already mentioned potentially the 116.2 or something like that as potential level. You are quick, man. Yeah, which target are you looking at on that potential euro dollar long?
So euro dollar about 116.20. That's sort of roughly where I'm seeing it.
Yeah.
It's really hard to quite tell exactly what side we're going to pop to, especially with the bank holiday today. I don't know if we're just going to chop around and sort of sideways in the range we've already had for today. But let me go over to, I think it was it's roughly where the 200 moving average is declining on the 4 hour.
Top of your chart.
So there's a bunch of mess on here from what we were just putting on earlier. But yeah, so up into here, roughly by the 200 moving average on 4 hour. And this is also where we sort of had that first drop, recovered to here, and then capitulated right through there. So there's a bunch of volume through that period there. So I think that's kind of a natural area, and roughly the mid-section, sort of mid-trading range through here, basically, of this higher cluster, right, through there to there. So I think that's a reasonable target on the upside.
Yeah, I kind of agree with you. On that one.
Yeah, and the thing I do see, like, you've got, we're leading off this stuff. Like, you got the 10 moving average coming up through here. We've tapped into that a couple of times. We came down the other day, tapped into the 50 here. We've got wicks on the bottoms through here, but at the same time, the upside hasn't been decisive either. So yeah, I just want some clarity here. Probably going to be kind of boring trading day with the US out. So
yeah, sorry, I don't have much expectation for today's session, to be honest. Yeah. We had Titan kind of mentioning, because Marco mentioned regards to the government reopen and maybe being positive for the dollar. Then you have Titan mentioning that maybe not, in case maybe the data is going to be actually towards more cuts, which could lead the dollar to move on. But yeah, keep bringing in that conversation. There you go. There's a continuation for Marcos. Marcox, maybe that's the way you pronounce your name. You could be right, but I'll be shorting it for a scalp when it hits 1 hour to 1 minute order block, as 4 hours is already okay. That's more of a technical move. No liquidity support. Okay, guys, that's great. Yeah. Keep chatting on the chat as well. Okay, using the chat exactly for that. That's one of the purposes as well of being here. Even by any chance, either me or Jay, whatever is streaming or hosting the channel, if you don't see our comments, you guys can have conversations between yourselves as well, which is great.
Yeah.
All right. So what else are you guys looking at? Do you have any bias on gold? You're expecting gold to go higher again after the finally run away from this range?
Yeah. So gold's it's sort of come up into that higher cluster, sort of consolidation sort of cluster after the big initial drop, that we traded sideways for a little bit and then, made the next down. So pretty much just pulled back up into the top area of that. I think what I was talking about, yesterday, I think it was. It would have been yesterday. Was basically for us to sort of top out somewhere around here, that 4150 kind of area, and kind of just chop around back and forth. I think we're going to get a bit of a period just like when we got stuck at 3,500. We hit that peak, came off, and then sort of just sideways for a bit, and then in like a condensing range over time. So that's kind of what I'm looking for at the moment. So my most probable outlook is for us to top around this 4150, pull back. I don't expect we're going to break through here and suddenly have a giant run for the for the all-time highs again yet. So
You're expecting more of a range instead of a run through to the highs.
Yeah, at the moment, yeah, unless something conditionally comes out and changes. That's sort of what I'm seeing right now. So yeah.
Okay. Yeah, it could happen definitely. I'm curious, as soon as price takes a little bit of those highs. Yeah, your sell zone is a little bit higher than the highs. Is that where you have your sell zone?
Yeah, that was the initial. Basically, after the first drop, I was looking for sells
That
basically
was
in
already
that area.
okay.
Yeah, no,
Okay.
because that was because of that wick through here.
Uh-huh.
So anywhere in that area, obviously, we came basically to the top of it here. So just below there, and then came off.
We never touched this one. Do you like though? Do you like that? Like when you have an eye on the specific level and price kind of gets close to it, but it never really touches it. Do you try to trade that level kind of in the future? Is that something that you try to do, or you kind of ignore the level in future then?
I guess I both trade it and ignore it at the same time. I'll always just take like this sort of cluster here as the zone, right? And then I'm happy to, like, if we stall out short, I can see these. I mean, it's hard for you guys to see with this now. There's too much garbage on the screen, but we zoom right in. You can see we basically started topping out here just by the bodies. We created that wick in there, right? And then came off. So whenever we get up to that range, this is where I start considering sells. And then I'm just looking for whatever, candle action is actually telling me that we're now sort of topped out. So I'll typically price something in, like if we go, say if I short from here, I'll just leave enough room to the top of that sell area, and then look for my bottom take. And what we were looking for, that was right down here. So that's still a sizable bit of room. But what I ended up doing through that, there was a couple more trades in between here that I don't have up on here, but I basically just came in, jumped out, came in, jumped out, and just kept re-entering at each point. So yeah.
Okay. Because me personally, I like to try support resistant supply demand zones as well, right? So, and many times we do have maybe a supply that is being created either in the origin of the break of a previous structure or something like that. And sometimes when price retraces, it doesn't really retrace all the way to touch the supply. It kind of leaves it almost on purpose. It kind of stops before that. So that kind of in the future, price will now use that new high that was created as liquidity and actually then touches the real supply and kind of then
I see what you mean.
And those levels are actually kind of one of my favorite ones to actually look for trades in reality. In the moment, it's a bit frustrating because I'm already interested in selling from that point, but price kind of misses my level, so I kind of miss the first initial move. But then in the future, being patient with that, which may happen 1 week afterwards, can happen 1 month afterwards, or 3 months afterwards. Those levels tend to be quite strong as well, and quite good to look for a trade. So personally, actually, I'm looking for around the structure on gold at around 4,200 maybe, to see if we're going to find any kind of selling pressure at around that structure.
4,200, you reckon? So a bit still.
Yeah, it's just after.
That's basically right into that.
Here.
Yeah, it's right into that level.
Yeah,
right. I see what you're saying. Yeah, I'm following now.
Yeah, I want to see some kind of liquidity. Now, one of the things with gold is that this could look like a good accumulation phase because price did spend kind of 2 weeks or maybe 10 days at around this level, and that could look like kind of a good accumulation period for price to go challenge eventually the top again. I'll be much happier shorting something if the low is kind of created quite quickly and then price moves away and back to a good structure a little bit higher than if price spends a lot of time at around here. If price spends a lot of time around here, it's maybe a lot of accumulation being made, and maybe price is ready to just go and eventually break the previous structure. When there is a low, something like this really quick, then there is a higher probability that maybe price at least wants to retest that level one last time, or even just confirms and it continues to break a little bit a little bit more. So that's a little bit just my concern is how much how long price actually spent close to these levels and now breaking quite strongly to them to the upside. But we'll see. We'll see. It's kind of similar also to how long the price kind of spin around this level, and all of a sudden it just accumulated. When price does that, it's a bit of a concern. But we'll see. We'll see what gold will do.
Yeah.
Yeah. What else, guys? What are you guys looking at? Long gold, long Asia high. What is it? Asian high.
This is what 41.50, wasn't it?
Yeah, somewhere around there.
49, basically. Yeah, overall, I mean, gold, still bullish for today at the moment,
Yeah.
Yeah.
I could like a good level for me to be interested to be if price by any chance retest back into this 4,040, something like that, like the upper edge of the structure. Maybe from here could be a good long, especially if price already takes this top. For example, one of the plays that could be in place in here is maybe price ends up taking this structure, providing some information that maybe price does want to go a little bit higher by breaking above this structure, but then find some kind of selling presses just after that, and then kind of maybe retraces back into somewhere around here to then just go again to the upside from this level or from here, and then maybe eventually tries to go higher again. So this could be interesting, which could maybe find some kind of selling opportunity at around that level, and then maybe some longs once price comes back into these 4,000s before potentially can go higher. So those two,
that's what I'm
levels
looking at
I'll be
as well.
interested.
There's some kind of a topping point and then pull back into about 4,050. So yeah, the top of that box there. Agreed.
All right. Tamari is saying that I haven't looked at the dashboard. Have you looked at the dashboard? Is it any different?
Not the dashboard. I mean, I know the website's been redone and everything.
Yeah, the website it's been done. Dashboard, I'm not sure.
I quite like the new website. It looks really good.
Yeah, I agree.
Oh, okay.
Is it different?
It has been redone. Yeah, it must have literally been in the past like hour or 2 hours or something. Because mine was the same before.
Different. Mine is quite. Mine looks the same still.
Click. I think like if you click on one of your accounts.
Yeah. Oh, okay. The dashboard of the account.
Yeah. And so it's like the stats and everything, I guess.
Okay. All right, that's nice. Yeah, we are at the 5ers. We are doing a lot of work behind the scenes, and it's finally coming out into
all being unloaded now. Yeah.
Yeah. So that's been we've been quite busy, to be honest, and we are still busy doing either new projects and everything else. So if it looks like that we are not doing anything, we are actually doing something. That's good, and glad that you guys like it as well.
Yeah, I'm gonna have to look at more later. I can actually get a proper chance. But, nice. Yeah, dude. Market just chilling today. I don't really know what else to say. Sort of covered it all with yourself and Jonatan already.
What about oil? What do you think of oil? Oil has been stuck as well. Oil has been stuck.
Yeah.
I've been waiting patiently for price to come back into these 57s, whatever, to potentially look for longs, but it's been completely stuck around this level in the middle. So I would like it to go back eventually towards this level to look for potential new longs. Do you see anything changing on oil?
Not really. I mean, going when you go towards winter period in the US and stuff, obviously, oil tends to drop through this period. The thing the other portion that's adding lift is one, we've had all the sort of cuts and everything from OPEC, all this stuff digested. Same with Russia still pumping out all the oil and just selling it on the side, right? And the US has given up on trying to stop them doing that. It's too difficult. And then the other portion that's so all of that is sort of priced in. And then the other portion that we have is the US government is topping up the SPDR, so the special petroleum reserve, after they unloaded it during the huge energy spikes that we had when we had the Ukraine-Russia thing initially pop off, and we had all the rest of inflation going on. So they dumped all the barrels that they had in reserve to help bring oil prices down. Now that oil prices are quite low, they're looking to refill those reserves. So that's adding a bit of lift, a bit of bulk to the price.
Yeah.
So yeah, similar deal. I think we're sort of range bound for the time being. Yeah, ultimately. So.
Somebody's asking about Ethereum, Infinity. Are you looking at crypto as well or not?
I haven't been lately. I mean, obviously BTC came back down to that 100 mark. We dipped through it like a touch. What did we get to? It was like 99.5 or something, was it? Yeah, 99.5. 99 flat, I guess, at lows. Not really. I think once we get government open again, it's back to this liquidity thing. I wish the government would just open already. I just want some data, I want some news, I want normal trading environment, that kind of stuff coming back. I think that'll start to support crypto as a whole. And then you've got the same with the likes of ETH. And as I was mentioning before to you guys, like the SOFR rates, once that starts to come down, which it has in the past couple of days, that means your meme stocks, high beta stocks, leverage assets in general will start to perform better. So, crypto is going to do better with that. As that stress was going on, obviously we've seen crypto, altcoins, all that kind of stuff get whacked. So that's also a part of that. I think particularly looking forward to, if we do get the stimulus checks from Trump, then that will be a very interesting time. Because then I think we might see crypto get a bit of a pump through there. One, both on just the expectation that people, dump things into crypto, but I think, in general, we'll get a massive risk on move from that. So that's sort of what I'm looking for going forward. Right now, again, we're just making that gradual recovery higher. So I'm still bullish overall on crypto. I don't think the cycles are dead yet. We're just trading sideways a bit longer. Because we're in more of a 5.5 year cycle now instead of 4 years. So a lot of people are putting this on the 4 year cycle. Oh no, we haven't blown up and got to 180K. It's all over. But if you actually look at the new debt refi cycle from the government, that's basically on a 5.5 year timeline now. So if you extend the crypto cycle out another 1.5 years, that's where that'll fit. So same old, pretty much the same as the indices. Any of these dips seem to ultimately get bought, right? And it's sort of just play the range that we've got. I'd much prefer to buy indices overall, though, if I had some money lying around, rather than crypto. Yeah, like I've said before, I much prefer to view crypto, whether it's Bitcoin, ETH, any of that stuff, as more like trading a stock. So more like investing rather than trading it day to day, typically. But I mean, you got your structure through here, pretty clear. That'll draw, bang, break of there. Boom, we've come up to basically the bottom through there. Next point is to break these highs, come up to the next resistance point. Pretty simple. And right now we've got decent momentum holding up, basically riding this 200 moving average on the 15-minute.
Yeah, last week it was a kind of an aggressive move to downside, with Bitcoin retesting that $100 mark, slightly below 100,000, and that's going to be always a support level, like eventually resistance level, and it's a good recovery so far, to this point. So yeah, we'll see. Do you think by any chance you're going to go below 100 again, or are you going to just keep holding these 100? Okay.
Look, I mean, it's Bitcoin, right? It can do whatever it wants to.
Yeah.
We waffed about. I think when we were talking about a while ago, I was saying like, yeah, we'll just back and forth through. Obviously, drew this out on different timescale, but yeah, sort of just up down with a gradual tilt to the upside. So through here, we've now got this forming. You could definitely come up to this side, take another dip, and then sort of consolidate something like that, and then eventually break out. So you could see another tap of 100 for sure.
Yeah, because you do have a good level of structure on the left side, so maybe price can somehow take that liquidity and then literally just run again. To the upside. It's going to be interesting. It's going to be interesting to see what
that block through there, right? So, and that was originally the move I was looking through here for us to come down. We didn't quite make it through there. We ran back up, broke the top side of the channel, went for another break to the upside, but now we've come down, met that level. So, yeah.
Yeah, indeed.
There you go.
Yeah. We have Mark Cox. He's really excited with RSI. I think he made a few comments about the 1 minute chart RSI. I don't know if he's asking us to prove that he's a lagging indicator, or if he's affirming this.
The first thing I'll say on that, like, if you have something that's a lagging indicator, you can't prove in real time that it's a lagging indicator, because by definition, it's lagging. Like, the syntax of that question is not quite correct. But basically, okay, what an RSI is you measuring the relative strength. So it's a relative strength index, right? So relative strength of an asset, the movement in price based on whatever period you define. So if you take the stock standard RSI, it's going to be the past 14 periods, typically on a simple moving average. So that means it equally weights the 14 periods, or you can have an exponential moving average where it weights heavier than nearest price action, the most recent bars, versus the initial bars, right? The reason it's lagging is because obviously it's based on old information, old data, right? So there's going to be a delay, especially when you have it on an SMA, because it's smoothed out. So if you get a new impulsive bar that's much heavier, but it's still waiting, clearly there's some kind of new piece of information that's entered the market in that most recent piece that is obviously absent the prior bars, but it's now weighting them equally. There you go. You're basically just measuring something via prior price data, trying to get an expectation of forward data. And because it is relative change, the market can go much further and further and further. That's why you'll see, even when something's overbought, the market just keeps going up and up and up. Right?
Yeah, it then continues in mentioning on the 5 minutes. I think he puts his limits at 90 and then the other one at 5, like which you see extremes of overbought, oversold situation. Yeah, I think it just. Yeah, I think it just mentioned I made a lot of comments about RSI. I don't know if this was a conversation before, because I think Jonatan and
it's talking with Jonatan. So if you want something that's more real time as far as a momentum indicator, like use like a stochastic. So all of these are basically, they're mathematical equations when you look at, RSI, stochastics, all that kind of stuff. So if you go study a bit of math, physics, whatever, learn what stochastics are and how this stuff is actually calculated, then you'll actually see why it is, how to use it. So some are going to be more lagging, some are closer to real time, different sensitivity weightings. That's why often people run like an RSI, MACD, and a stochastic. That's one of the oldest, classic, you just started trading, just learning about indicators type, thing that people get into. But yeah, so with any indicator that you use, I would say before you start throwing it out there and then, trying to make price action decisions or trading decisions on it, definitely do a bit of, simple Google search, find out how the indicator actually works, why it became about, what was the use case intended for, and when was it invented. There's a number of indicators look and sound really cool, but then they're invented for a completely different time in the market. It might be 40, 50 years ago, and then they're not so effective now because you have different real-time pricing data. You got algos, you got computers, everything running in the market as well. So,
okay, yeah, I think it likes a lot the just RSI on the hour time frame, and he can, for him, you can see the prediction of price based on that when price gets to the extreme levels, anticipating a move, which is great.
You definitely can use it. An example of how different they are is look at the RSI and then put a stochastic, and you'll see how much the RSI is lagging against a stochastic.
Yeah. And bias. I personally think all technical indicators are based on historical data. In lagging, also news are lagging. Again, the indicators, price will always be ahead of the indicator. That's for sure.
Yeah, it basically confirms a trend after it's already started moving. So as far as getting in and out of price, like the price will, move, depending on what time frame you're looking at it could have moved 50, 60, 70 points before the indicator itself is actually signaling that it's sort of topped out, right? And you're probably like rolling over. Viewing something on a 1 minute, 1 minute is obviously much more higher frequency, so you're just getting higher input pieces. Simple as that.
Yeah.
There you go. Hello, Stephen. I think you brought this up before, but hey, mate, how are you doing?
Yeah. Perfect. What else? What else can you look at?
That's the Dixie at now. Oh god, let's. I promise I will actually go through and clear all these charts this week, guys. When I get a chance. I've said that like 4 times now in the past couple of days. Yeah, so still keeping an eye on the Dixie here to see if we actually do break down, start, that downside momentum actually accelerates, or if this is just what we were saying before, a bit of a fake out for us to ultimately just return higher, right? So, So what we're seeing right here, euro dollar, still deciding. Dollar yen's about the same. We're just sitting around here, haven't moved too far. Where's the level for today on the NAS? 25,622. So it's actually a bit above. So yeah, options are pricing about here. So that's interesting. So possibly see, I want to see this come down a bit further than coming towards New York. I'd possibly then look for a long from here. It's a bit better. And then look for a move back into that 622 level.
Are you expecting volatility today with the?
Not really. I think it's going to be pretty quiet, to be honest.
Yeah.
A lot of hand sitting as well until this shutdown thing ends. Because then that's going to determine a lot of like when we will expect stuff like inflation, the rest of the jobs data, week-on-week claims, all that kind of stuff coming out. So.
All right.
But yeah.
Okay, maybe we can bring another topic. So today for the Portuguese live stream, I think we're going to talk about how emotions affect our performance. Okay, so basically, having a win being enthusiastic, having losses being frustrated or anger. Basically, fluctuating based on the outcome constantly, and basically our emotions fluctuating constantly based on the outcome that we are getting, and that end up affecting consistency within our trading. Like what tips would you give anyone that is suffering from that he still gets too attached or emotionally affected based on the outcome of the trades that they are getting? And yeah, how do you solve that?
I guess, okay, so I think it's like a premeditation thing, so I think if you're still getting that once you're entering trades, or something didn't work out, you probably haven't thought about the prior conditions enough. And maybe it's just a reminder thing, because maybe you do think about it to begin with and then you forget along the way. But I guess it's just one of those practice repetition things to constantly remind yourself that this is a probabilistic game. You're not going to win all the time. That's just not how it works. And so long as you've followed how you should have operated, right? Followed your plan, whatever you want to call it, your structure, your process. So long as you've stuck to that and obeyed that rule set, then you can't be upset with the outcome, because you did basically everything you could. And if you are still getting that, then yeah, I would say it's just one of those things you got to constantly remind yourself until it gets ingrained and it just becomes second nature and natural. So that'd be in its simplest form.
Yeah, one of the reasons that maybe people still get way too affected is because of all the expectations that they are making with themselves, right? You have the expectations of, I want to achieve this target, I want to become funded in the next week or month, I want to get the payout in a certain moment, I want to change my life as soon as possible. So they continue to get affected based on the expectation that they establish for themselves, and every outcome that they get, it's either a step closer or step forward or step backwards towards the goal that they want, and they kind of are always running behind and feeling that they are running behind, and they end up lacking patience to give time to the goal that they are looking for.
Yeah, sorry, I could have answered that better. I just got to respond to message. Sorry. Like,
it's okay. Because another factor that then also plays a lot is not even the on a day-to-day basis, kind of on what they are doing in the moment or within the same trading session. It's about one of the main things that I struggled as well. It was the transition towards the next day. Like if you had a negative day, and the next day when you are turning on your PC and starting your day, you are not trading what's in front of you, but you are trading your yesterday's P&L. Basically, you're trying to recover from the mistakes or from the losses that you had yesterday. So, for example, if by any chance we are even in a trade, maybe just by looking at P&L, if you recovered yesterday's losses, maybe even close the trade early just because of that. And then you feel that, okay, at least I recovered what I lost yesterday. I feel better with myself, or whatever it may be. Or if you still continue to go into a deeper hole and not really managing to recover, then you start maybe over trading, trying to again bring that bad cycle into place, and continue to make even more mistakes in that. So Did you have any tip, or it's kind of the same way, kind of just experience and repetition on how to deal, especially when you finish the day, to be able to reset completely your emotions and to come the next day more prepared to trade actually what's in front of you and not what happened yesterday? Do you have any tips on that?
Sorry, I was totally distracted. I'm just
Okay. That's basically, yeah.
Sorry.
It's okay. Guys, by the way, on the chat as well, like if you do have any tips or if you are suffering with that aspect, feel free to let us know. Richard, I know that was on the back end. He was paying more attention to me than LJ.
Yeah, no,
was.
no. I'm going to come in full in again in a sec. I just got to, before I do, I'm going to have to send off a couple emails and stuff as well.
Go ahead.
That's all good. That's just, yeah. I just got to sort a couple things, and I'll be back in like, I don't know, 10 minutes.
No problem.
Pedro, sorry that I'm laughing. I'm laughing at Will because he got on the wrong boat in Venice.
He got on the wrong boat? Okay.
Yeah. He's supposed to be on a boat and he got on the wrong boat, and now he can't be in the stream. And all that went through my mind is there's a comedic band called Lonely Island from America, and they have a song called I'm on a Boat. And that it just flashed through my mind and I couldn't unsee it, and that's why I was laughing. So I wasn't laughing at what you were saying. I was laughing.
No, it's okay. So how are you doing? So is he? I'm good, thanks. Is in Venice? Will at this point?
Yes. They're busy with the Funded Freedom challenge from Trade Delicious, and he arrived yesterday in Venice with the intention of trading his way through Italy, and I think yesterday he was something like $400 down on the live account, and he managed to claw his way back, I think, to $50 down. And I think they only get about 50 either dollars or euro a day to spend, and the rest they have to make up. So if you want to travel somewhere, you need to make money on the account. Exactly. If you wanted to sleep somewhere, you have to make money on the account. And the only caveat that they had was the fact that yesterday they did not have a place to stay. They had no lodging. So I'm very, very curious to see when the episode comes out whether or not they actually found a place to sleep, or if they ended up sleeping under the stars, on a bench or under a bridge or something. So I'm really waiting for that. It's going to be very entertaining to see.
All right, now that's interesting. Now we got into the wrong boat now, so that's even more interesting now in Venice. I have a strange story as well in Venice one time, because I did Erasmus in Ljubljana. But the way to go from Portugal to Ljubljana, there was no direct flights towards Slovenia. So I went to Venice, and from Venice then you used to get a train that would go direct then eventually to Ljubljana. It would take a few hours, but there was just only one train. It was at 10 p.m. Okay, so basically it was literally the last thing at night, and you need to catch that train to go, and then you arrive like 2 a.m. in the morning, whatever it may be, into Ljubljana. But the first night that we went there, we actually ended up missing the train. Okay, I think it was like 10 of September. So imagine when you see the dates, it's like 10, like 09, 10, whatever it may be. And we thought, for some reason, I think we thought that was the time of the train, but the train was literally kind of half an hour before that. I think we actually were waiting on the train station. We saw the train, but we decided to kind of, oh no, look, it's still half an hour to go. And then we saw the train leaving, and kind of we had to figure it out where to spend the night as well. So that was how it started my Erasmus experience. It was something, it was like that. And then you had to spend a new day because there was only one train per day. So we had to spend a new day. It was not bad to spend a full day in Venice again. But yeah, that was my story as well. Kind of either missing the train. So maybe things happen in Venice, strangely. But yeah, it was an interesting one. Yeah. But back to the topic. Did you hear the question that I asked you about the struggling one day to the other in terms of auto-diving your emotions, trading your account and not, or trading what the market is offering and not your P&L from the day before? Did you struggle with that or not?
I
within
don't think
our.
I heard the question. Would you mind
Yes,
posing it
sorry.
again?
So yeah, it was about trading emotions, okay, and how do they affect your performance? Okay, basically they're getting too excited when you win a trade, or kind of sad or upset, whatever it may be when you lose a trade. So that's maybe a question. Question one: within the same trading session, how do you deal with that? And question number two, it will be more of one day to deal, like coming up the next day. How do you deal still if you had a bad day or if you had a good day? How do you balance yourself, kind of reset from what happened yesterday towards the new trading session? For example, for myself, I did struggle a lot to, if I had a negative day, I struggled to come into the next day because I was just thinking about recovering what I lost yesterday, basically, and
Very good
that
question.
would lead into bad trading.
Very good question, Pedro. So when it comes to trading psychology, and especially if we just take the idea of emotions, let's just take emotions in a nutshell. If you're the kind of person that tend to make emotional decisions, or you are reliant on emotional decisions, emotions tend to have a higher impact on how you feel throughout the day. So let's say you wake up in the morning, you're in the car, you're driving to work, and somebody cuts you off. Some person in another car just tries to ram you off of the road. You will have an emotional response. It's going to be a mixture between shock, fear, anger, and then the idea maybe of revenge, like these ideas of getting back at this person. So you're going to go through a multitude of emotional experiences in that moment. Now, normally what will happen is you go home and you will tell your partner that this person in this car, this a-hole, just tried to ram me off of the road, and it just screwed up my day, and I was so angry, and I yelled at my secretary, or I yelled at the person that brought me my coffee, that kind of like thing. You notice that emotional moment took over your whole day, took over what could have been a very lovely day, and you were focused only on that one moment. And that's the exact same thing when it comes to trading. You're busy trading an idea. You see the market is busy aligning exactly to how you want your trade to run out. You see prices slowing down. It's busy changing its momentum. Oh, yes. Okay, cool. Here's my entry point. I enter. I drag my stop loss, and as I pull my stop loss into its place, price just goes and takes my stop loss. Immediately, I'm angry. Why? This thing didn't even, like, it was a fake out or whatever. You have an emotional response, which is a normal thing. So in general, myself, I used to have this problem where an emotional event, a singular emotional event, would impact me over the long term. So if I had a losing trade in the morning, especially if I really believed that trade was going to go in my direction, it was going to go and hit TP. My expectation was that it was going to be in my direction, and it doesn't. I would get annoyed. I would get frustrated. I'd be a little bit angry. And then on top of that, I would then, for the rest of the day, feel like, ugh, you know what? What's the point if I'm just going to keep on losing? So you kind of like drift towards the negativity side of trading. Even though this was a singular event, you're blowing the importance of this event up to the point where it means a lot more to you than it should. So emotionally, being compromised while trading is incredibly difficult to maintain profitability if you're emotionally compromised. So if I wanted to curb that, what I needed to do was to remove emotion from trading, which is more difficult said than done, to be dead honest with you. Emotions is a natural part of life. Everybody has emotions, but you're not saying I want to stop having emotions while I'm trading. It's what that emotion, that grip that emotion has on you while you're trading or after you've experienced that emotion. To give you an example, I just lose a trade. The emotion that I have is I'm annoyed, I'm angry, I'm upset. Feel the emotion. Just acknowledge that it's there. Acknowledge that I'm annoyed, I'm angry, and whatever. But then what you do is you say, okay, done. I'm done feeling this now. Now let's move on to the next one, because this was a unique moment. This was an isolated, singular event. and I move on to the next trade as if the first trade did not happen, as if the first trade's emotional experience did not happen. I move away from it. This is difficult, but it's a choice that you have to make. That's why yesterday I explained to, I was having a discussion with Victor, and we were talking about things that's within or outside of our control. If something is within my control, what I would do is I will claim ownership of it. So I know that following my plan is within my control. I have no control over where the market's going to go. So the thing that I do have control over, I will claim it. And if I did not follow my plan, which is within my control, then I will pay the consequences. The consequences being that I'm going to go deeper into drawdown, or I'm not going to be as profitable as expected, as an example. But I will claim ownership of it. And the same thing comes down to emotions. You have an outside factor that's impacting you. In this case, the market is not going in your direction. You lose a trade. You following the trade, entering it, pulling your stop loss, putting your take profit, everything in place, that's all within your control. But the market moving is not. So now it goes against you. Feel the emotion and understand that it wasn't within my control. So why are you angry or upset over something that's not in your control? There's a question that I asked myself. I'm getting upset over something that I have zero control over. All I'm doing is I am just adding fuel to the fire. I'm just making myself more upset, because then I'm going to start saying stuff like, oh, why is it always me? Or, oh, it's so unfair. And then you're kind of like taking away the responsibility from yourself, instead of saying, you know what, maybe I was impatient and I entered my trade earlier than I was supposed to. Maybe I didn't wait for confirmation. Whatever the example might be, bring the responsibility back to yourself and say, okay, it didn't go in my way. It's fine. Let's see if there's something that I can learn from this, instead of saying, oh, life is so unfair, etc., etc., etc. So, Puli is saying this perfectly. When emotion steps up, logic steps back. If you're having an emotional response to something, logically, you're going to struggle to make a logical decision, because logic and emotion are opposite sides of the reaction, basically. I don't know if that answers the first portion of the question. The second portion that you asked was, is there something that I can do to maybe alleviate how negativity impacts my day-to-day trading? So I found out in the past that if I didn't sleep very well, if I came to the market a little bit tired, whatever the reason might be that led to me not sleeping all that well, or I just didn't get the quality of sleep that I necessarily needed, and I'm a bit groggy and I'm a little bit annoyed, and just looking at the market annoys me, I know that I'm going to make bad decisions, because I'm making decisions from a point of being annoyed, a little bit tired, maybe a bit upset. So my decisions are impacted by that. So what I would do is I would say, okay, if I wake up this morning and I realize, I'm not feeling great, I will still come to the market, but what I would do is I will drop my risk. Or I would say, when I normally have 2 to 3 trades a day, I will only go for a singular trade today. Because all I'm doing when I'm adding more trades to my arsenal on a day where I know that I'm not necessarily going to be making the best decisions, I'm just adding another decision, a negative one, maybe another negative one, another negative one, and it becomes compounding. And then that's where stuff like you try and steal back something from the market. You lost maybe $100, and now you're going to try, okay, I'm going to try and steal $10. I'm going to try and steal it $20. And then before long, you've lost another $400. So it's understanding that decision point that you have in that moment is based on emotion, and no amount of data that you have from your backtesting, from your win rate, from your risk to reward would be able to be realized if you're going to do it from an emotional standpoint. Because mathematics is not emotional. It is logical. It is a logical thing. Backtesting is not emotional. it is you have all of the data there. The decisions that you're making is emotional. So you want a logical outcome, but from an emotional viewpoint, from an emotional decision, it's folly. It's not going to work. So first step, realize when you're making an emotional decision or when you're allowing emotional decisions to control your actions. That's the first and foremost. It's going to be personal for every person. Myself, I know when I haven't slept well, I don't make great decisions. And then the action comes in. Maybe I shouldn't be trading on a day where I'm feeling like crap. Maybe I shouldn't be trading on a day where I didn't sleep well. And then you need to hold yourself to it and say, okay, I realize that this is a problem. I'm not going to do this today. I'm not going to enter a trade today. I'm just going to sit and watch. And that's where the discipline comes in. That's where the idea that the biggest battle in the trading sphere is you versus you. It's you versus your habits. It's you versus your indecision. It's you versus your impatience. It's not you versus the market. So that's basically one of the things that I would say has impacted me in the past. And what I needed to do was just realize and decide to take action against it.
Yeah, that's a great answer. Both answers. One, understanding and the realization of the problem, of the issue, that you are emotional. I think that comes along with a lot of experience as well. I think that goes after being exposed to those situations and through pain. We usually that's how human beings also do it. Like we kind of change through pain as well, or we start finding solutions or change habits after we actually do feel a lot of pain, and we say enough is enough. Before you get to that point, I think you can just easily continue to do and repeat the same mistakes. So it comes into self-awareness, as you mentioned as well, on recognizing what triggers to actually behave that way, and then it's a lot about implementation of some practices, or either on the trading plan or even on our own behavior to kind of stop. Even if we cannot control it initially, because maybe we are not skillful enough to control or manage our own emotions, there are then tricks and tips that maybe can do it. For example, I think the reason why many people say that they open 1 or 2 trades per day, it's exactly because of that. As you mentioned, like it's the compounding effect of the mistake that usually creates a lot of damage into the account. Is not one mistake. Nothing happens with one mistake. Usually, neither in relationships, nothing happens because one bad thing happened, unless, of course, it is a massive bad thing. But usually, it's a combination of small things that end up destroying whatever it may be. And the accounts on trading, it's exactly the same thing. It's not the first mistake, it's then trying to recover, as you mentioned, try to steal from the market those 10, 20 pounds, and then actually keep just giving back 200, 300, 400 back to the market. I think Alex Hormozi, actually, the other day, I was watching one of his videos, and he mentioned, I think one of these, I don't really remember if it was a form of success that he was kind of living by, but I think it was the moment that he was exactly finding himself in those situations of frustration, or that something bad happened around himself or in his own life, how quickly would he be bounced back to the level where he could perform again at his best level. And most likely for us, it may take, when you're inexperienced, it may take maybe the full day to actually stop trading for that moment, or even take a few days. And then eventually with more experience, and this is where experience comes in, it goes from a few days to 1 day, to 1 day from a few hours to eventually a few minutes. And all of a sudden it's quick. You can make one mistake and it's almost as it didn't happen. You can remain focused and continue to operate in the market, right? So that's kind of an interesting definition. Is basically after you do make a mistake or something tragic happens around you, how quickly can you come back to actually be mentally focused and prepared to operate at your peak performance, basically.
100%.
Yeah, and that's kind of an interesting perspective to put into it, because again, things happen. It cannot just be even in regards to the trading. Can be around us, can be a discussion with your partner, can be something going on that upset you in the morning. Maybe the lack of sleep as well. Again, self-awareness is really important. I notice as well. I can still survive with one bad with one night with lacking sleeping. But if it is kind of into the second or third, that's terrible. That's my mood changes. I'm impatient. I'm not a good person to be around if I have 2-3 nights in a row where I don't sleep nightly. Yeah, and then the other thing is because, for example, Jamie mentioned and commenting here, and one of the tricks is exactly that: is maybe deciding that you are going to only execute maybe 2 trades a day, and that's your limit, and you stop it because you recognize that after that you tend to do mistakes. Or this part as well, the visualization is really important. So one way, you mentioned that you kind of accept that you are feeling that emotion after a loss, and you tell yourself, okay, it's enough, I recognize it, let's move on from it. Another part that can help is also the visualization, this anticipation. Like he's already creating the plan where there is a scenario where I may actually end up with a stop loss, where maybe I end up with a target, or maybe price will not even get in field, or it's going to be around for hours, and what I'm going to do then. All right, so visualization preparation is a big part as well on how we can continue to be under control and kind of emotional stable throughout the trading session, and that would be another one.
Yeah, I like this. The visualization of losing a trade before it happens. You're anticipating something's going to happen, and you already know what you're going to feel. And then when it actually happens, you're not surprised. You're not surprised by the emotion. You're like, well, I expected this. This is fine.
Mm-hmm.
But it's the idea of making sure that your expectation is in line with what it is that you're trying to achieve. So if my expectation is that this trade is going to lose, maybe I'm going to take a trade that intentionally loses.
That's the tricky part, yes.
Yeah, try not to make it a self-fulfilling prophecy. I like the idea, Jamie. It seems like it's something that really works for you. So here's something else as well. Try and disassociate the value of a singular trade. Understand that every moment in the market is unique, but it's part of the bigger picture. Every singular trade that you take is part of that bigger picture. The impact of a singular trade is but water. It is a droplet in a big stream. It is one drop. Eventually, yes, if you don't manage it properly, it can become a big problem. You have too much water in your dam and it's going to overflow. But the idea is still that when you look at trading from a process-orientated viewpoint rather than a P&L-orientated viewpoint, you come to realize that following the process and accepting whatever the outcome is better for you in the long term than it is for you to focus on the profits and the losses. So we tend to put so much emphasis on a singular event that we allow that singular event to control us, instead of us saying, you know what, I'm going to let this go. It's not worth my sanity. It's not worth my emotional state. It's not worth it to have an emotional response to this. I acknowledge I'm having an emotional response, but I'll deal with it. I'll deal with the consequences of it later. Right now, I don't want to deal with the emotional consequence, which is very difficult. Like I know a fair few people that really struggle, let's rather say, really struggle to have that emotional control in the moment. And it's something that you work on every single day for a long time. And then eventually it starts clicking. But it can only click if you actively try and work against it. You actively put steps in place, but you also keep it within expectation, understanding that Rome wasn't built in a day. It takes time. Roads lead to a certain area, but there's crossroads. You can take the crossroad, but eventually you must try and get yourself back to the main road, as an example. It's a very deep subject when it comes to emotional response in trading. It's a very deep subject because we put so much emphasis on that singular event being the be all end all of our trading. if you don't mind me asking, Pedro, what is your current win rate, just your percentage right now on your, let's say, your main strategy that you use?
Yeah, it's between 45 and 50%. It's in between that graph, that
bracket. Okay.
Yeah.
So 45% of the time to 50% of the time, you're correct. That means, inversely, 55% of the time to 50% of the time, you're wrong.
Mm-hmm.
Meaning, if you put all of the emphasis on the negative side, the higher number of the two, which is 50 to 55%, how would you view yourself? Would you consider yourself, just purely on the win rate, would you view yourself as a successful trader, or would you view yourself as a not successful trader? I think most people would drift more towards the not successful, because you're looking at a singular metric to define a very, very nuanced, very large thing. In this case, trading. You're looking at one metric, and it's the same thing with emotions. If you allow a singular moment to define your whole day, you're allowing a small thing to impact a massive thing. It's the same concept. So it's a viewpoint change. It's a mindset change. Doesn't happen overnight. It takes time. It takes days, sometimes years. There's people that spend tens of years to find enlightenment, and then even then they don't find it.
Yeah.
Just putting in that effort.
Yeah, and then the problem is looking at one event and thinking that is, as I mentioned, the answer for everything. And one of the reasons for that is because many people are looking at trading as escape to a better life, and the expectations that they make, that they are having every single day that they jump into the markets. It's a step closer or step forward, further away from the goal that you want. It can even be money, can even be ego of trying to pass a challenge or get the payout, can even be completely changing their lives and to get into a better financial conditions, whatever it may be, right? But it's kind of that big goal that everyone has with trading, and then every single person then looks at it as a single trade, as yes, I'm getting closer, yes, I'm going there, or no, and what am I doing? Like, where am I doing this? Or look at this mistake. Why did I have FOMO? And whatever it may be. And they kind of it lack that patience, that long-term perspective, and focusing on the process, believing that's going to play out eventually in the future. But now it's important to focus on the now, and not always on what they want, or where you want to be already next year or 6 months from now, whatever it may be. And I think that plays a big role on the way everyone kind of deals. Most people deal with the emotions into trading, because they come with that perspective. They want to make money as soon as possible, as quick as possible, because that's going to lead into changing my life, whatever life may be. Patience. It requires a lot of patience. It just requires a lot of patience to get there.
Consider this. Every single day that you are practicing patience, guess what you are? You're patient. Exactly. Every day that you're not practicing patience, guess what you are? Impatient. It's like that quote, do or do not, there's no try, from Yoda. So the idea, I wanted to do the voice, but I decided not to. But the thing is, when you're learning to ride a bicycle, the moment you climb onto that bicycle and you start pressing those pedals with your feet, even if it's assisted, guess what? You're riding a bike. When you're learning to drive a car, the moment you get behind that steering wheel and you start that car with the ignition, and you start moving forward, doesn't matter how fast or how slow or how perfect or how amazing, guess what you're doing? You're driving a car. The idea is, when you practice something, you're not practicing, you're doing. You're actually doing the thing that you're trying to practice. I'm going to practice patience. You don't need to practice it. The moment you become a little bit, for not doing the Yoda voice, the moment you start doing a thing, you're actually doing it. You're not practicing. The practice is how good you're going to do a certain something. Like how often you do it, it will eventually become, I'm really good at this thing now. I can I can do it faster, I can do it longer, that kind of like thing. There's no trying, there's only doing. There's only action.
Yeah.
So if you want to be a patient person, anybody in chat, if you want to be a patient person, start with small things. Start by choosing not to react if somebody cuts you off while you're driving down the road. Just understand that, okay, this is going to happen. You're allowing somebody else's action to impact your emotional state. And be done with it. Just say, I've had enough of this. Like, this is rock bottom for me. I don't want to experience this anymore. I'm through with this. Screw this. I don't want to react this way anymore. The next time that scenario approaches you, or you experience that scenario, you will choose to take a different reaction. You might start be like, you know what? It's okay.
Yeah.
You just carry on with
practice it as well. Yeah. Because I always look for those things. Funny story, when I used to train at a different gym in the city, I'd often go to Hungry Jack's after. So Hungry Jack's in Australia is kind of like Burger King. Go there after the gym, get a burger, whatever, blah, blah, blah. It is the busiest place on earth, this specific Hungry Jack's in the city. Always swamped. So they're always slow. There's always delays, all that kind of thing. But I'd be there every single day, always going there, getting my burger. Everyone's complaining. Everyone's got a, slap face going like, oh, where's my thing, this, that. I always just be standing there, calm, smiling, cheerful, whatever. I used to come so often that the employees there and the manager would always notice. And then I was just always so nice whilst everyone's being all rude and stuff. And then end up getting employee discount. She'd always just put it on for me every time I come. And exactly that, like I saw it as a, thing to, just practice patience, practice whatever, and just, it'll come when it comes.
Yeah. Perfect.
Guys, thank you very much for the conversation. We didn't miss anything on the market. Basically, for the last half an hour, market didn't move whatsoever. So don't be upset because the market basically didn't do anything aside from Marcox and the RSI on 1 minute time frame that is still going around. So no, I'm kidding, Marcox. I don't know if you are on Discord or not, but if you are on the 5ers Discord, maybe you can share your analysis, and maybe then you can use your images, because I don't use RSI, so maybe it's easier actually if you provide the data and the info, and then we can look at it, and maybe in a future stream in here. And now we have the great and amazing Griff on the back end. So Griff is going to come in. I'm going to move. Thank you very much, guys. Griff, can you? Okay, I'll bring just Griff like this. Griff, welcome. LJ, Richard, thank you very much for the conversation. LJ, I hope you replied to all the emails you needed to
yeah,
reply.
I did. Yeah, sorry about that. Yeah, I got busy real quick. All of a sudden, stuff popped up. Yeah, apologies for that. Yeah, sorry, Pedro.
No worries.
Okay. Thanks, Pedro, for joining us, and thank you for having the conversation. Great question, by the way. Love that kind of discussions revolving around the psychology and the emotional side of trading.
Yeah,
Definitely.
thank you. Thank
Cheers,
you, guys.
Pedro.
Have a good day.
Bye-bye. See you, mate.
See you.
What's
Hi
up,
guys,
Griff?
how you doing?
How we
See
doing?
you both.
Going strong?
All good over here. All good over here. I've got my jumper on. I'm nice and cozy.
Got a good one. Nice and cozy.
Definitely don't have a jumper on. God.
Yeah. Do you ever get to wear jumpers over there?
In winter,
Yeah,
yeah.
in winter and everything. Yeah. We do. It does get cold. We actually had like snow and stuff, and a few real icy periods this year. So Australian weather's it's quite weird, and there's Australia's so big as well. There's such a mix. Like you go down to like Canberra or Melbourne and stuff, wake up in the morning, there's ice on the rails. Come to Queensland, you won't get that, but there'll be certain periods, in some portions where you'll get like light snowfall. Very rare, but yeah.
That's great. That's
cool.
good.
Yeah. No, it's good.
So how's everybody been, Griff? How's your one trade a year going?
Yeah, well, make that 2 trades last week.
Whoa!
Actually, Richard. Make it 2
that's 100.
losing trades.
I thought.
Yeah, I did manage to get in some positions. I think one was a reduced risk loss, and the other was just a straight 1% loss. But they're good trades. I can go over them if you'd like.
Yeah, definitely. The market's not doing too much today, so
yeah, I'm not seeing setting up for myself either, to be honest.
I mean, there's some movements happening a little bit, but it's just subdued.
Yeah,
it's really just very subdued.
It's just wandering, Yeah.
But I mean, it's okay. I mean, we can. Oops, didn't mean to delete that one. It is okay. It's days like this where you get to practice patience.
Exactly. There you go.
The story of my life.
I wanted to show something on GU, specifically where we are now. We had news this morning. Claimant count came out quite a bit higher, but that is expected because unemployment rate picked up. So makes sense. So overall, the reaction was we're going bearish. But then immediately after this nice little drop off, we kind of entered this I don't know where I want to go phase, really. It is lower lows and lower highs in relation to the previous ones, but it's just, where's the conviction? Where's the I really want to follow through? I really want to push lower. Didn't really see it. So what I did was I decided I was going to mark up every low point and see how the reaction was when getting close to that low point. Until I eventually got to this point over here where we're now. This one. The first time that we actually did not print a lower or / equal low in relation to the previous ones. This is after news, mind you. So the expectancy is, we have pound weakness in this case. We expect the pound to continue dropping lower. No follow through. And then eventually we get to the point where the bulls are starting to say, hey, this reaction that happened here, we understand that, you guys are weak now, or we were weak at this point, but we kind of want to start pushing higher. How do we know this? Very first time that we did not create a lower low in relation to all of the previous movements. And the candles itself is really starting to show more volume in relation to the bearish structure. Mind you, this is on the 5-minute. Okay? So take that for what it is. It's just a 5-minute analysis. Price then eventually started pushing bullishly. So now we have our very first higher than high than the previous one. And obviously we know that we have a higher low because this box is basically the low point. So we have a higher low, and now we have a higher high, and price pushes higher even still. Another higher, once again, relative. Now we also have a higher low as well, down here. Look what happens next. The attempt to push lower fails immediately. And then we start printing bullishly. So the question is, based on this, at what point do you turn around and say, we've gone from a bearish structure, lower highs, lower lows, and now we're on a bullish structure, intraday, 5-minute, bullish structure. At what point are you going to say, we have completely changed the bias for the day? Do you go higher time frame and say, okay, 15-minute, half an hour, 1 hour, 2 hours, that kind of thing, undecided? Or are you going to say, lower time frame, we are definitely one of the two? I don't know if that question makes sense. What would you, LJ, use as confluence to say, I think intraday, intra-session, this is the direction that we're going, versus this is the expected direction we're going in based on the higher time frame?
Right. So per the news we're talking about, though.
The news.
Yeah. So per the news, hang on, I'll go over to mine. So per the news, what I always look for when you have some kind of data drop is basically, similar structure we had here. So form this kind of like descending wedge through here, popped out to the other side, came back, tested it, and then we've run back up. Now, for us to then turn bullish, I would typically look for wherever the candle was. Let's make that a little straighter, up the Picasso's, for us to actually go and clear that. So I view that as like the high pole vault level for us to have to, price to have to meet that level and actually clear it for us to actually flip from basically the bearish stance into some kind of bullish momentum, right? Because typically you'll see price does sort of retrace up into that level. Very, very common move as well with NFP, right? You get the initial move, you get the pullback, tap right to basically where we drop from, or else it might be up to like the 38% of that move and then come back off. So typically I always look for that opening candle on the data, and we actually need to clear that. Otherwise I would consider this, just pull back into that price and then continue lower. Simple as that for me. So
yeah, I'm saying awesome. Maybe the way that I envisioned the question in my mind, you answered it perfectly, but like in my mind, maybe I was complicating the question way too much. But yeah, I like that. The fact that you're looking for a specific area where the reaction happened, the news reaction happened, and you're wanting to see price play around that area and then make a decision based on that area. Yes, initially we're bearish, but at what point does it change its character from bearish to bullish? This is the point that I'm looking at. I like that.
Yeah. And then, similar deal, finding that basing point for the sort of retracement is once that momentum stops, you've had a couple of taps, a couple of attempts, you get that drive higher. That's why I typically have the 10 moving average as well. So hence you can see this sort of gray line through here. As long as we're still under that, it's still valid. Once you pierce that, now it's into question. And then I'll typically look for some kind of pullback into like a retest type framework for us to find, more buying pressure in this case, and then move higher. And then basically once you're on the other side of that, you've established that ground. You can see we come up, we pull back into it. And so long as that stays valid, you keep running higher as well.
I like using the 20 EMA for that one. The 10 EMA for me is very fast.
That's why I like I always have, because I normally have volley bands on there just for like the visual as well. So I'll always have that 20 going through. But yeah, for that flip change, I like the 10 for the reason it is a little bit quicker for that same reason. So
yeah, no, I like that. I see Mark Cox is still on the idea of the RSI about the lagging and non-lagging effect of it. I don't know if you guys have commented on it. I didn't really watch the stream beforehand. What was the I don't know, the outcome of that?
Basically, it was basically saying he's looking at the RSI, how it's moving, and therefore saying that, okay, price is going here next based on the RSI. I don't know. We were talking about when Jonatan was on ages ago as well.
Wow, okay.
Yeah, like 3 hours ago, pretty much. But yeah, I was basically highlighting that, those momentum indicators are exactly that. It's momentum. So they are slightly lagging because it's based on the prior data. Once they sort of peak and then roll over, price has already started moving by the time the indicator plays catch up with price. Because obviously the indicator is based on the past 14 candles, as an example, for the RSI, when the current candle has shown you that we've already started the move. But the indicator is going to be the average of 14 candles. So you've got 13 lagged candles in there, and you got one like current, so.
Well said.
The thing is, any indicator that you have on, for argument's sake, TradingView will always be lagging in relation to the price. Almost all of them. Because you also have to look at, for argument's sake, the condition under which it prints the line. So it's both lagging, but it can be leading in the sense of it can kind of like change your bias towards a direction. Like, to give you an example, if I look at the MACD shows the slowing of momentum based on two different time-framed SMAs, in this case a 9 and a 14 or a 12 and a 26, that kind of like thing. But it shows you that relative to the last 26 candles, price is not moving as volumetrically as it had done. So you can see slowing momentum. So in a way, you can kind of like say, you know what, it's slowing. What is the chances of it's going to start turning soon? So it's lagging because it requires the time frame to close first, because it's based on the closing price of the last 26 candles. So the price has already happened. And then the equation then takes all of that information into mind, and then then calculates and prints the information for you. So it's lagging. That's what makes it lagging. It's the fact that it's reliant on the current price to actually close before it relays its information. And then the leading aspect of it is the fact that you can use that information to kind of like guess, I think that it's going to start doing this. But if it was a leading indicator, it would have been correct always. And the thing is, it's not always correct. Even the RSI on the 1 minute isn't always correct. If it reaches overbought, are you going to sell? How much are you selling? What is your risk to reward? Is it flat? Is the market moving flat? Is it now all of a sudden dipping a little bit lower and then going higher? Can you say that every single time it reaches overbought on the 1 minute that it is going to start turning? Can you say the exact same thing for the opposite? I've never looked at the RSI on the 1 minute specifically to that degree, so I can't give you an answer on that. But I do know that most indicators, if not all, is lagging. And the lagging means that the price needs to print first, and then the indicator will follow based on its... That is what makes it lagging. I don't know, Mark Cox, if that explains the idea of lagging versus leading, because where the reliance is for the mathematical equation, exactly as LJ explained.
Yeah. So yeah, that's what I was talking about before. Like, you've got like a stochastic, which is going to be higher frequency, quicker, it's more responsive. RSI is different. I was saying just open up Google, look, that's exactly what I said. Look at the mathematical calculations. You can see how it's calculated, and you'll see exactly why it's lagging. So yeah, I don't know. We've gone on about it quite a few times.
Yeah, so we keep coming back to it. Yeah. So anyway, what do you guys want to talk about? What are we looking at? We're looking at gold busy going a little bit down in relation to where it was. What are we seeing? Yeah,
just sort of chopping around here. So, I mean, gold, ultimately, I was looking for this kind of area. This is basically the top section, right, from this bottom trading zone through here, right? You've got these prior tops after the initial large fall that we had. And that was basically the movement I was looking for last time. So we had the initial large drop from the all-time highs, came right down, pulled back just by the bottom of that wick, right? And then this was a sell zone. Yes, I have to clear this up. It's very hard to see, but as we've pulled back down into there, we've now come back up into the top section and testing those relative tops before the second downdraft that we had. So my expectation is from here, if we can't obviously break those tops, we'll probably just get a bit of a pullback into the top of that lower band, right? And then sort of trade sideways through here and either break back into it or we get some kind of move up and through. There you go. There's my scribbles for you guys. Looking beautiful.
I love your scribbles, mate. They make it incredibly difficult for me to understand what's going on your chart, but if it makes sense to you, mate, it makes sense.
It does. Like I said, I've said it so many times now. I need to clean it up. or probably set some of the like the opacity on some of these things, so it's easier to see.
Talking about RSI and these other indicators, what's the Kalman trend levels indicator that you've got on?
So the Kalman stuff is basically what was used back in like the 60s to calculate like the trajectory and position of like rockets back in the day when we didn't have technology advanced enough to sort of, like GPS location, that kind of stuff, to precisely find where an object is. So they had to basically use Kalman equations to figure that out. So, and that these days is exactly what's in stuff like GPS, any of these like location finder type things, right? So Kalman indicator pretty much runs off some of the people often call it like normal moving averages are like the poor man's moving average, and the Kalman indicators are like the, I don't know, advanced. But I don't know what's the opposite.
The rich man's moving average.
Yeah, rich
Well,
man.
let's not call it the rich man. Let's call it like the middle class. The middle class.
Moving
average.
It's not quite rich because they still have a degree of variability. But basically, like, look, we'll go here. If we do this, this is what I did last time.
Is it the moving average you've got, which has like a gradient?
Yeah. So I'll show you basically what this is for. So, it's not what I wanted. It's not giving me just the simple definition.
Try the filter, the Kalman equation Kalman filter.
Here we go. This is better.
Yeah.
It's not quite it. It was a beautifully like AI written description of this last time when people were asking about it. But essentially, it's measuring the location of something given slightly imperfect information. Put it that simply, right? So when you have noise, assumed variables within the calculations, it allows you to accurately place where something should be. So obviously, markets have a lot of assumptions in them. There's a lot of noise, a lot of chop, and it's got imperfect information. So, yeah.
Very
Put
cool.
simply.
Yeah, unbiased trader.
I'm not as sharp today. Sorry, guys.
I'd not heard of it before. That sounds really interesting.
It looks kind of cool when you think about it, but it's also I haven't gone through the actual calculations of it, but I have added it just to have a look at it on my chart as well, just for the fun of it, just to see what it looks like. It's kind of interesting. I just don't know how to incorporate it into a style of trading as an example. I'll have to do back testing on it on something just to kind of like see what it is, but it looks cool. It's I don't know, it's pretty.
Yeah, you can see it turns gray when you're kind of in a neutral area, red when it's basically showing the overall momentum indicators are saying that there's increasing momentum to a significant degree that you can now call it bullish or hence bearish, and then obviously you got the neutral space in there. So again, it's just somehow I like on here, quick, easy, way of just visualizing stuff like that. So there's lots of different ways you can tweak them for the calculations and stuff as well. So it's not just like a one size fits all. You got to play around a little bit.
Once again, no singular indicator is going to show you exactly everything that the market is doing and when it's doing it. People, if you're going to, everybody in chat, if you're going to add an indicator to your chart, don't use it as a buy and sell indicator. Use it as a confluence or as a kind of like a bias indicator. Like maybe we are pushing a little bit more bullish. Maybe we are printing a little bit lower highs. That kind of like thing. Don't make it the absolute core of your trading strategy, because every indicator that's out there has a failure rate that is relatively either equal to 50-50 or lower than, or let's say failure rate higher than 50%. Like, it doesn't matter what kind of indicator you're going to be using, there's going to be a failure rate. And then on top of that failure rate, it's really going to be dependent on how you're going to manage your trade. Like, let's say, for argument's sake, you have a MACD crossover strategy. You have a MACD, every time the signal line crosses the MACD line, you take a trade in the direction that it goes. You can do your back test on that, and you'll see, it's a 50-50 as an example. So I will buy when it crosses bullishly, and I will hold it until it crosses bearishly again. And you'll see that that's roughly 50%.
Yeah.
So don't make a singular indicator the core of your trading. It's not a particularly smart way to approach the market.
Yeah, they're a piece of the recipe, right? You take, you need flour, you need sugar, you need whatever else, add it all together, and then you get a cake, right? But yeah, so you take them as a whole, they're assistive. But yeah, so this is basically the definition I was looking for. So Kalman filter is a recursive algorithm used in statistics and control theory to estimate the state of dynamic system from a series of noisy measurements. Right, so perfectly describes markets, for example. Works by iteratively predicting the system's next state, then correcting that prediction with new measurements. So effectively combining a predictive model from the past data with the real-time data as it comes through. So yeah. Hence,
Thanks.
You can see where that would be applicable for markets. So there's some math if you want it, but
Yay, math.
Yeah.
My math days are over.
So yeah, but yeah, so some of the here, it's what you use to predict roughly where an object should be in real time with a degree of limited information. So,
and I mean, trading is exactly that. It's a game of limited information. It's incomplete.
Very much.
Yeah.
So there's a lot of speculation that goes into trading, and yeah.
I'm going to play around with that indicator.
The Coleman one. It's very interesting. It looks pretty cool, especially on my
Maybe
blue and
for
black
20
chart.
minutes.
Yeah. No,
What are the? I can tell it's kind of got a moving average crossover type thing, but what are the boxes that it draws on?
Yeah, we'll go to like a different chart that's maybe a bit clearer.
I can see how the colors change as they interact with these boxes.
It's
the crossover candle, where the slower, and faster EMA crosses.
Yeah. So these are kind of like I don't know what else. What's the other thing people call the order blocks, whatever you want to call it, something like that. It's kind of like that. It's basically just highlighting the point where price cracks. It's kind of like support and resistance.
Yeah.
So hence you got the green guy here. As long as you stay above that, bullish, right? But you can see within the larger structure, we're still overall bearish. Hence the red one comes right the way out. And then so up until you reach that point, even though right now you're seeing near term a bullish sort of structure printing, you're still overall bearish in the larger picture. Yeah.
Cool. I can see how many times it's reacted off of that most recent bullish crossover.
Yeah.
It's had 2 rejections there, and it's moving up.
Yeah. And so you can see this is where, obviously bearish through here, you can see the momentum is starting to wane, and now we've come into that neutral zone. And obviously if you visually you can see it right away. The momentum stalled there. We now pick up through there, right? You look at that structure. Then once we got up to here, we're basically just in a retracement. We've pulled back into here, then established more momentum higher. That's where you've kind of confirmed getting a hold above this, that you're actually moving into positive momentum near term. So, yeah.
Very cool.
And also still lagging.
Yeah.
Yeah, still lagging. Yeah. Like for instance, I mean, and as well, then like you'll see on a different time frame, the structure will be completely different. So you can go down 15-minute and see you've got interim pieces in there, right? So that's where you go. Take a look at that. Like the 1 hour showed all of this as neutral, but you go down to 15 and you can see it's highlighted that through that break clearly bullish. Right? Yeah. So
I use indicators purely as a visual aid.
yeah,
That's all. Purely as a visual aid. Like Samsha has mentioned, people should be taught that indicators are to be used to diagnose the market rather than a decision maker for executing trades. I like that. I really like that comment. So just use it as a visual aid. If you struggle to see momentum, as an example, get a momentum indicator that helps put that into a visual framework for you. If you're somebody that struggles to kind of like see what is the average of the price, put an EMA on, or a SMA, or any moving average. Let it be a tool to assist, not to do the operation for you. You know.
Exactly.
It's unfortunate that the price action is the way that it is today.
Yeah, it is. It is. It's very snoozy, and it's not helping, dude. So when I got the after leaving the hospital, and the doctor gave me some meds if I'm like feeling sore, that kind of stuff. They're like, oh, they'll make you a bit drowsy. I was like, okay. I didn't take them on the weekend. I took them today, and I just feel mellowed out. Like I just feel leveled. When you're like
how we can see it?
Unconscious.
We can see it here. Yeah. You have rosy cheeks, mate. Like you look like your face is warm. Like you're like, I am so tired, man.
Yeah.
I'm about to fall asleep.
Yeah. No,
Shame,
so I feel like I'm completely like awake, chilling, but I just feel too like calm. Like my brain, like it's normally like into gear. Today I'm just like, huh?
Brain is not braining.
Yeah, I'm in slow mode. So
slow mo.
Yeah.
Yeah, and the problem is we have both a US and a Canadian dollar or Canadian bank holiday today, and we had the French bank holiday as well for the euro. So your two biggest market participants for the New York session is just asleep.
Yeah. So
don't expect price to move any better when we get into the New York session.
Mm-hmm.
It's just it's going to be subdued and stay subdued.
It's NFP on Friday as well, isn't it? Is it this going to be this week? I find that NFP week is often quite slow and rangy as well.
Yeah,
it's tentative. Do we know if it's going to actually come out?
Yeah, so it depends. First of all, if the government opens in time. Secondly, then how quickly, once it does open, can they collate the data, and have they even been able to go and get enough data in the first place?
Yeah.
So otherwise it might be next week, because it's going to be a similar thing with the CPI on Thursday. Quite likely this stuff will end up being next week instead. Because even if, say, they open up today or tonight, there's probably not enough time for people to come back to their desks, scramble together, and get something to release. So
yeah, but let's take it as if it's gonna come out and trade responsibly.
Yeah.
Well, I feel like I'm
the government shutdown things. It's going to be any day. Today, tomorrow, next day, Thursday, maybe Monday. Who knows? Were you going to say you feel like a
gambler's disclaimer? Don't risk more than you can lose. That kind of like idea.
You're ruining my fix, Richard. I'm just trying to gamble my money away here, telling me to be sensible.
Stop coming with these sensibilities of you.
Quit trying to steal my autonomy. Yeah.
Why are you guys trying to decay my alpha so much?
I don't mind this pound move that we were sort of talking about before. If we do, find this sort of topping here, like we were talking about, that's the open of that candle. It's roughly the base of the higher cluster we were trading in through Asia just before that. And then, you got the 200 here on the 5-minute as well. So nice sort of turning point potentially there.
I do like GU's price action here on the 5-minute. I feel like, do you think it will reject the purple line you've drawn on, or do you feel like it will continue higher?
I mean, it's going to depend.
It could go higher.
Yeah, it could go high. Like it depends right now on euro dollar, because euro dollar keeps trying to sort of jump up, not really getting there. We had this slight break of this like triangular wedge type thing through here, and it was a question of, okay, break that and run, or no. Like we're saying, like there's US is out, Canada's out, so it just seems as though there isn't the extra liquidity to come in and take it there. Similar deal with dollar yen. We were sort of getting some momentum, end of Asia coming to early Europe, early London, and then we just sort of died and we just gone sideways. So that trade, I jumped out there at the top once we died. But so I think we're just going to be tight range for the rest of the session.
Yeah, I don't see us particularly. I don't think we're going to close the day on a massively bullish candle. I think we're probably going to end the day on either flat candle or slightly more bearish. That line that LJ drew, that decision point, let's rather say, is also smack bang in line with the Tokyo low as well, which was already basically reacted upon, when it was created. You had a small little reaction off of it. The day for me is bearish. The price action is very nice on its way up back to this point, but if you did want to take a trade, you would have needed to get in a lot earlier, because I don't think that there's going to be enough volume coming in the New York session to really push this to newer highs, or even to the highs of Tokyo. Don't quote me, but I don't think so. Yeah. EU is not. The price action was okay today.
It was. I did take some back and forth stuff on EU earlier today. At least it's actually moved more than like.
That is true.
Right? So.
I mean, look at gold, flatlined.
Yeah, gold's completely dead right now.
NAS is dropping though.
Nowhere. Yeah, I'm still short NAS. So.
You know what I did earlier? I took a NAS short, and as I was pulling my stop loss, I didn't pull the stop loss with a mouse. I right clicked and I said modify order, and I started putting in my stop loss manually. And I had my stop loss 1-0 closer than I was supposed to. And it literally just went, knocked me out of the chair. I was like,
wait, what? Like instantly?
Yes, like instantly. I was like, what?
Oh, right.
Why?
No.
Look at it. I was like, oh, okay. That makes sense. That makes sense. So what I was looking for on NAS is, it was even before London opened up, we had this bottom portion that looked really good on the Tokyo session. We started printing a little bit lower. We tried pushing higher. We failed. And then eventually we just started pushing a little bit lower. And I decided, you know what? I'm going to put in a sell. So this was the low. It tried pushing higher. It failed. It didn't really look great over here. But as it reached this candle, I was like, you know what? I'm convinced we're going to go lower. So I put my sell in there with the intention of going, I think it was up to here. That was where my stop loss was going to be. And then I ended up making the stop loss somewhere down here, like I think it was 5. So instead of 5,000 points, it ended up being 500 points, which was literally a $5 change.
Yeah.
It just went, coop. I was like, why? What? So this trade was supposed to look like this. This is what it was supposed to look like.
You decided not to re-enter it?
No, I decided not to. Like, I think I explained it a few times before, but I haven't maybe mentioned it recently. If I've made a mistake with a trade, I take it as if I've taken the trade and it was a loss. So if I've made a mistake, I say, you know what, I can either have an emotional response to it, or I can stick to my plan, and the plan is I would have taken this trade. Let me see how it runs out for in future, so that I don't reward mistakes. So I made a mistake, and if this trade ended up going to profit, it's going to teach me that I can just make mistakes, and the randomness of the market is going to eventually reward me with a good trade. So just say, you know what, this wasn't my trade. I made a mistake. Come back tomorrow more focused, and make sure that you really check before you press enter. Confirm. So it's just my way of keeping myself accountable. Yes, it would have been nice having a trade like this, but I don't want to reward either bad habits or mistakes. Especially if I have control over them and I can control how I place the trade. I've done it before where I didn't check how much my lot size was, and I ended up putting in 10 times the amount that I was supposed to on gold. It was supposed to be a 0.1, and I ended up putting a 1 lot size. And I wanted to risk only $100, and I ended up risking $1,000. And I was like, oh, whoa, no.
Yeah. I was about to say, at least you fumbled it on the stop loss before, because the worst is like fat fingering, like you're saying, your lot size, or 1 lot on gold, and then you've got 10. You're like, no, wait a minute, no, bad.
I only realized it when I looked at my P&L, and I look at the P&L, and I'm like, I'm $250 down. How am I $250 down? I'm only supposed to be $100 down. And then I look just a little bit to the left, and I see the lot size is 1. I was like, oh. I immediately closed the trade for a $250 loss. Fine. It is what it is. I accept, okay, I didn't pay attention. The worst thing is that $250 was the deepest into drawdown it went. It literally went to that point and just...
That's typical.
And just started going. And I trade 1 to 2s. So it would have been a $2,000 trade. And it was just like, no.
Yeah.
Will, how are
Hello.
you back at the airport?
I'm picking a car up. So Ewan's gone off to find the car. So while he's finding the car, I thought, I'll jump on with you guys and see if I can find some trades. I haven't entered a trade today just because the market's been absolute garbage for me. And then we had to get on a boat. So we got on a boat, got on the wrong boat, got off the boat, got on a new boat. So I'm like 2 hours behind schedule. But look, we're here. So we're here, and it's time to start earning some money.
Nice.
When you said you were on a boat and you were on the wrong boat, the very first thing that went through my mind is there's a song by a band called Lonely Island, and the song is I'm on a boat, and that was the only thing in my mind that was going through it was just you and Ewan on a boat going, I'm on a boat, and it's just, okay.
Classic song, classic.
Dude, I'll tell you what, like Ewan said to me, he was like, William, I think we're on the wrong boat. I was like, nah, the Italian guy said, he's like, yeah, that boat there. I was like, okay, and then we got on the boat, he goes, that's true. But look at the map, and we're going in the opposite direction. And I was like, oh shit, we are actually going in the opposite direction. We're going the wrong way. So, yeah, it was stressful. But we managed it. We're back at the airport now, so Ewan's going to pick the car up. And,
Good job.
Nice. Recovered.
Thanks, guys.
I'm gonna jump out. I gotta finish up wrapping up some of the stuff I was doing before And
Yeah,
then
LJ Legend, thank you
probably
so much
just
for
gonna.
coming on, man.
No worries, man. Probably gonna snooze
Thanks,
after
LJ,
that.
for keeping us company, mate.
Or just
Even though you're drugged up
chill.
to your eyeballs at the moment.
Yeah, I just feel like
yeah.
I took like some of the medication I got from after being in the hospital, right? And it sort of makes you
You're
drowsy.
floating
But
in your bedroom right now.
no, I just feel so like mellowed out that I'm just in like cruise mode, you know, like when you're like consciously unconscious, you're like fully awake, but you're so just like, huh?
You're
What?
a mushroom cloud of calm right now.
Yeah, exactly. Yeah. I'm just way too chill. Yeah, exactly. But yeah, anyway. All right. See you guys. I'll see you tomorrow. All refreshed. So yeah. Ciao.
Nice.
Awesome. Cheers,
See
LJ.
you soon, mate.
Have a good one, dude. Hey, Griff, how's things, man?
Yeah, I'm all good, thanks, Will. How are you doing? Where is it that you're headed to?
I'm in Venice right now, but we're off to Florence in a bit. So yeah, I'm just trying to. I don't know. We're not going very far if we don't earn money.
So, Will,
Is
did
it
you
for that series?
Yeah, Funded Freedom.
Ah, cool.
Yeah. Say again, right?
Sorry, Will, did you end up reclaiming some of your losses from yesterday? I saw a small little update on the Discord.
How much was I down when I left you guys?
Down just shy or just over $400?
Okay, so I made back $340.
Okay, so $60 down. That's really not bad.
Yeah, I know. Ewan was saying to me last night, we were literally, we went for like a really late night walk just because A, we're in Venice, like, let's enjoy it and explore a little bit, and B, we had such a sort of stressful time. We just thought, what, we're flat in the markets. Now, we were so tempted to pull an all-nighter and just trade through the night. And then we thought, it's just not worth it, man. So we're just going to chill and relax. So we went for a walk, and Ewan said to me, he's like, can you imagine if you hadn't lost $400? We'd be $350 up right now. So,
how did that feel?
Oh, that sucked, man. I want to throw him in the river. I'm pretty sure we were on a bridge when he said it as well. I nearly chucked him over it.
I have a question, and I don't know if you're allowed to answer it without giving spoilers away. Where'd you sleep last night, man?
I'm not giving spoilers away. We did sleep, though. We did sleep.
Okay, because LJ and I, we don't have a bet going, but we kind of like have a, is it a park bench? is it a bridge?
Yeah, we did sleep last night. That's all I'm saying. But it wasn't comfortable. It wasn't nice or warm, but yeah, that's all I'm saying. Not giving any spoilers away.
So, for those that don't know, Trade Delicious is a company that Jordan Meller, and it's from Australia, and they have a series, and this is the second iteration that you're part of, Will, if I'm not mistaken.
Yeah, so we did a Cardiff to London, but this is our second one now, which is basically, I don't know what we're going to call it. It's just like Italy to Naples, maybe? I don't know. It depends where we go. I'm not sure where we're going yet, but we're just taking it day by day. So this is the Italian edition.
Italian edition.
Yeah.
So you guys can head over to the Trade Delicious YouTube channel, and you will see the previous iterations of the Funded Freedom series, which is all brilliant. I've watched all of them. They're all really good. I cannot wait for the current one to come to an end, so I can see exactly what...
I think it's the longest one yet.
I think the previous one you guys did 2 days.
Yeah, me and Ewan, we did... No, it was technically 1 day. We went up. Well,
but you stayed over.
Yeah, we stayed over and then came home. So we did my local town, my local village, all the way up to London. We had to trade our way there. And Ewan traded through CPI and ended up putting us in a hostel.
And then I think Jordan ended up doing a 3-dayer from Sydney from Perth to Sydney.
Oh, was it a 3-day? Okay, I can remember if he did
Yeah.
like 1 or 2 days or 3 days. I can remember how long he did.
Yeah, I can't remember the exact details, but it was pretty cool.
Yeah, no, it was, to be fair. Yeah.
So today you haven't really traded anything, have you, Will?
I haven't traded anything. I haven't traded at all. I'm looking at buys on gold, but I don't know if they're ready.
It's a difficult week to be doing this challenge. Well,
Isn't it?
like NFP week, US government shutdown, all these bank holidays.
Mate, it is a hard week, and like you can tell, it's like a real fundamental week. Like everything's quiet, everything's closed.
Yeah, we have bank holidays on on the French side for the euro. We have bank holidays on CAD. We have bank holiday on the dollar. So even the New York session is not necessarily going to look all that great.
Literally that, man.
What about your good old faithful Hong Kong dollar?
That's a fair point. I haven't traded that. The Hong Kong dollar is more of like my sort of. I haven't got it on this terminal. It's on my competition terminal because I do make good money with it. But
you should also look at crypto. To be fair, but that's
that.
not looking great.
Okay, if we get a break and close below this point here, I'm thinking about selling gold.
On gold?
Yeah, but we're wicking at the moment. We're trying our hardest to push up.
So are you looking on the 15 or the 5?
Bit of both, but predominantly the 5.
Okay, so that's the 15. This is the 5. So we're a little bit range bound at the moment.
Extremely, yeah.
So there is potential. There is potential, I think. Yeah, that was an equal low. So there is potential to go lower because we've tried our damnedest to push higher here, and we have just absolutely failed.
Like yesterday, I had $170 TP, and I said, "Ewan, if this was the last trade of the day, if this hits, we're in a really good position." And it went up to about $55, reversed down to like minus 80, went back up, and it just really just piddled about a bit, and it did nothing in the end. So I closed it. I'm not going to tell you where. I'm not going to spoil anything out, but I closed it. And then we were walking late at night, and I said, "Ewan, like this is what would have happened had we have kept it open." And it was like 3-4 hours later, and it still did nothing. It was in the exact same position.
It's frustrating, isn't it? It's frustrating when things, when it just doesn't want to do anything.
But I'm not sure. We'll see. I don't know whether to buy or sell gold right now. It's in a range. It's tried pushing higher, but it's not pushing higher. Now it's pushing lower, but I don't think it truly wants to push lower. It's a tricky one, man. It's a real tricky one.
You need to find a symbol which has a really clear direction for you, Will. If gold is looking up and down.
I think I'm gonna sell it, even if I just sell. Like I said, I'm gonna scalp them anyway. But I'm better with my buys than I am with my sells. You know, I prefer to see buys. Yeah, I'm gonna sell. I'm selling right now.
Good luck.
Even JPY, the USD JPY is a little bit indecisive. AUD.
Thing is, we've got spreads as well when we're selling up, so I got to take that into consideration. But I'm up $20 at the moment.
Did you end up taking a trade?
Yeah, you took a short
on gold.
Yeah.
Let's have a look on the 5 minute.
Yes, on the 5.
Yeah, I was looking at the 1 minute, which is something that I never do on gold. I had a look at the 1 minute. I marked something up. I think it was on the close of that candle. And then I had the stop loss just above this little box that I'd drawn, and then aimed for that bottom portion of just before London. And I don't know if I don't trade the 1 minute, so don't take what I have to say as the gospel. But
Will
it
is
didn't
locked in right now.
Say again, Griff.
I was
I
up
said
20
Will
bucks.
is locked in.
Bucks.
now.
Okay.
Yeah, he's just like focus.
Hyper focus, man.
He's moving the charts with his vision.
I kind of want to, like I said, I'm doing what I did yesterday. I'm just scalping some quick bucks. So if I can get back to like 30 bucks, I'll probably just take out there.
Chart Addy is saying I sold gold. Gold is about to drop. Maybe, maybe not.
Hopefully.
Time will tell. So W7 Forex is saying, for me, the gold sentiment is awful this minute. I'm looking for a shake up in gold right now. I'm looking for a $10 move up or down. So switch sentiment. Yeah, as it stands right now, the range that we were in was effectively just shy of $10 range that we were stuck in for the last, what was this, since 11 o'clock for me. So the last three hours, almost 4 hours now.
In fact, I'm an hour behind you now because I've moved up an hour due to being in Europe.
Oh,
I'm
okay.
in so I'm an hour closer to you now, instead of UK time. So
nice.
right now it's 2 minutes to 1 p.m. in UK in Italy right now.
Yeah, it's 3 p.m. now here by us.
Oh, sorry, no, sorry, no, it's 1 minute, 2 minutes to 2 p.m. on my phone. But my computer's still UK time.
Yeah, it's about the same.
So I got a 2 hour difference, 1 hour difference on my computer to my phone.
Moreau asking, wouldn't bank holiday affect trading? Hence, it's better to stay away. In general, if you have a bank holiday, the bank holiday or the country in which the bank holiday falls, that session is generally going to be a lot more subdued. So USD and Canadian, those two countries, is most active during the New York session. So the New York session, in theory, should be a lot more subdued because your two biggest participants are not there. So
it's always good to stay away from. If you got a bank holiday, it's always good to stay away from that asset. So like you just perfectly hit the nail on the head with. If it's a GB bank holiday, stay away from all GB pairs. US, stay away from all US pairs. You know,
Especially with JPY, because I think the Japanese, they basically only trade their own currency. Whereas at least, we will trade other currencies that aren't the pound despite living in the UK. But like I know with Japanese currencies, they're definitely one to avoid when they're having a bank holiday.
Yeah, 100%.
Boys, I got to shoot off.
Yeah, fair. Awesome stuff, man.
All the best, Will.
Right,
I hope you get to sleep comfortably tonight.
Oh god, no. So do I, mate. So do I.
And nice talking to you,
I
Richard.
hope I can put fuel in the car.
Yeah, gosh. All the best. Good luck. See you.
See you later, Griff. Have a great
Bye.
one, mate.
Bye, guys.
shot, Griff, have a good day, mate. Will,
Hello.
it's unfortunate, mate. You being busy and all, you don't get to be on stream with me, so I kind of miss that. I've been missing our morning stream and banter and whatnot, so I'm dying to find out exactly what happens with your the freedom thing.
Yeah, dude, I can't wait. The minute I'm back on Saturday, it'll be Monday, back to usual. So I'll be back streaming with you in the morning. But it feels so weird. Like I'm not streaming like consistently here. So I'm popping in whenever I can. I got to pop out early. So I'm trying to do what I can. But guys, I do apologize. I miss you all. And I will be back next week on Monday.
how do you feel? Let's start there. Do you feel like the scenario that you're in is impacting your trading specifically? Are you a bit more stressed? Do you realize or do you know with? Does it feel like the stress is impacting your decision making? Anything like that?
100%. You know, like when I'm on holiday with like my missus, I would have already made the money to take her on holiday. Whereas right now, I feel like, you know, Ewan's he's okay at trading. He did an okay job. Okay, so we're looking at this now. I put another sell limit in because we've had a pullback. So like Ewan's an okay trader. He's not. No. I just put in a one lot. Oh my god, no. Wait, where's my one lot trade? Okay, I mean I just pulled out some pretty significant profits, but oh mate, that was no. Change that right back. Oh, that was not the scalp that I wanted. But it's the scalp that I got.
You got profits?
Yeah, ish profits. I paid $6.62 in commissions. But it's not what I wanted to be trading. Dude, that was a close one.
I was literally telling Chat and LJ and Griff before you came on about a glorious balls up that I made by trying to, on gold. I also tried to put in a 0.1 lot entry buy, and then I ended up putting a 1 lot, which was 10 times more than what I wanted to risk. I wanted to risk $100. And then I ended up risking $1,000, and I was like, "Oh no!" And I only realized
I literally just risked $650. I was like, "Oh, that's not what I want to be risking."
I only just realized that as I was looking at my P&L, and I see it's $250 down. I'm like, "How can I be $250 down when I've only got $100 risk on? What is going on here? Did I not place my stop loss?" And then when I just turned a little bit to the left and saw, oh, it was a 1 lot. Oh no, closed it. Crazy thing is, I closed it, which was the right decision, because no hindsight trading. It was the right decision, but it would eventually have hit my take profit point per my analysis. So it could have been a $2,000 trade.
Oh, mate. I mean,
but the right decision,
but 100%.
the right decision was to close it.
Dude, that is tragic. Can you imagine, though? I would have
like, what if I just put it in and I walked away? I don't know, went for lunch or something, come back, $2,000.
What if it was a pending order?
Oh, mate.
And it was a pending order that you just walked away from, and then maybe you had an alert saying you've just been triggered into your entry, and you're like, yeah, I've just been triggered into my entry, and you walk away thinking, yeah, happy day, just been triggered in, and then next minute, bosh, you get
you get a notification on your phone. You've just lost £1,000 or $1,000, or your account has just reached drawdown.
That would be the worrying thing. Like, you'd have a notification saying stop loss hit or TP hit, and then you'd come back, and then your heart would sink, being like, oh my god, the realization that you just lost what you've lost.
Keenan, Richard, are you from South Africa? I am, mate. I am from South Africa. I'm a South African trader, based, born, bred, the whole thing. South Africa. Unbiased trader is saying, I have a new problem. I think I close to trading discipline, but now I can't get off the live, even not well. New challenge, I accept. Oh, you did say earlier that you were unwell. You were feeling a bit unwell and that you were going to head off. I remember seeing that, but we were busy chatting, so I didn't acknowledge. Dear all, signing off as well, and 2 losses hasn't helped. Glad I did stick to my strategy. That's the important thing. You stuck to your strategy and not trade outside it. Good session and happy trading. Unfortunately, now you're addicted to the live stream and now you can't leave. I will preface by saying thank you very much for still being with us. And if any of you guys haven't yet, please drop a like. Subscribe if you haven't. Look at all of the links in the description box and go and give everybody a follow on Instagram, or you don't have to if you don't want to. But Unbiased Trader
Yeah, it's super cool.
Your
But
health comes first, mate.
yeah,
The idea is that if you're not feeling well,
as long as you're not trading the markets, though, there's no issue with watching the stream. You know, as long as you're not trading.
unless it's interfering with you, I don't know, going and taking your medicine or you
Yeah,
actually
no,
getting
of course.
some rest
Yeah.
and sleep. Take care of yourself so that yourself can take care of the markets the next day, kind of like thing. Yeah.
Yeah, look,
So,
a healthy man has 100 problems, an unhealthy man has one. Just remember that.
oh, dude, I love that saying. You said it the other day to me as well.
Yeah. I always say it whenever someone's ill or whenever I'm ill or whenever something's happening. Is gold trying to bull up?
Gold is doing gold things, mate. Gold, unfortunately, at this point in time, is not the most clear cut. I want a specific direction. Stoic Capital, South African traders in the chat. W, love that, mate. Thank you for being here from all the way from South Africa. So we're just waiting for price action to set up, and price action is just slow at the moment. I was looking at NAS this morning. I had a NAS sell that I screwed up.
I've taken it, guys.
You took out of your gold trade.
Yeah. I had to. It was such an awful position to be in there. If we hold this level, then I may open up another sell. But right now, it just made sense to me. So right now, I'm currently down 56. That's $100 now for the overall session. $120.
I mean, given today's
So
price
frustrating.
action, that's not the worst outcome.
No, true that, but
I mean,
it's not
you could have kept your one lot size gold entry open.
yeah, true. I mean, I banked $12 with that one lot gold entry.
I mean, it's $6 less that you have to make back. But it was still a mistake. But we understand, like, in the grand scheme of things, you can't always be in the best mindset while trading. There's a lot of challenges around you that tries to pull your attention away, like I'm trying to do right now.
I know. I go. Yeah, I know. It's just.
It's the frustration of it, mate. I understand, and it's the fact that you're so reliant on it.
Yeah, well, that's what I mean. Like, even as a full-time trader, I'm getting emotions that I haven't felt in such a long time. It's such a real feeling.
I feel like there's a lot of people right now that all feel exactly the same thing. Like, where they feel that they're in this box, they're in this corner, and they have to trade their way out of this corner. And it's just, psychologically, it's so difficult. Because you don't have the freedom to express yourself in the market the way that you would have wanted to. So you can't trade as freely as you want to because you have this nagging feeling on your shoulders. There's this constant idea that I need to make money. I'm so reliant on this. I think the freedom to trade how you want to trade is severely impacted by your mental state going into trading. So your mental state going into trading, if I'm reliant on trading as my sole income, it's going to be a stressful time, mate. It's going to be really difficult. And you've worked 7 years to get out of that mental state, and now you're basically in it.
Straight back in it.
Yeah, you're back in it, and now it's like the weight of it is a lot more. But if I can give you some advice, mate, it's just this. Exclude everything. Focus only on what got you to that point before you had to experience what you're experiencing now. The last 7 years, what is it that you needed to do to get to that point? Focus solely on that, mate. All you need to do is remember you're still a profitable trader, and regardless of the situation that you're in right now, you can trade your way out of it. You've proved it multiple times before that you can do it. Just stick to it.
Yeah, of course, absolutely, man. The only problem is I haven't got the time scale for that. That's
No,
the
dude,
only
you
issue.
do. You've got the time, mate. You can do it. No
Hopefully.
negativity. You're a positive Nancy.
Yes, let's go.
You have the positive mental attitude, and you're going to focus on the positivity. You're not a negative Nancy, mate.
Hoorah.
Hoorah. Hello, Victor.
Hi, everyone. William,
Yo,
Rich,
Victor, good man.
and everyone watching us today at this very moment. Will, I see that you're not under a bridge, and I celebrate for that.
I'm not under a bridge, but I am back in the same spot I was in yesterday. While Ewan is currently on his way to pick up a car that I've been told that we've got to travel to our next location. I don't know what
Okay.
car, and I don't know where he is. I keep checking my phone to see what's going on, but he hasn't messaged me yet. He did text me just now saying he's arrived, but there's no one here. So,
Hey guys, how are you all?
Hi,
Samir,
Samir.
what's good,
Hi
man?
guys, it's good.
How are you doing today, Samir?
I'm good. What about you?
We are doing great. You seem to be relaxed. You have a peaceful expression on your face. I take it you've been trading well.
Actually, yesterday I took a loss. Today's bank holiday, so I cannot trade today. I'm not expecting any volume today on my
That makes
pairs.
it even more special. You
Yeah,
are, yeah. You didn't have a winning day today or yesterday, but you look like you had, right? You're not focused on the result, but on the process. That's even better.
My God.
yeah,
He looks so
exactly.
calm. It's crazy.
Yeah. He looks
I look
happy,
calm. I don't know.
like no one can put a dent on his happiness. That's how I see Samir at. He's,
Content.
Yeah, I wake up very positively, to be honest, and I don't let anyone to ruin that mood. Not even
That's
my closest ones, to be honest.
not even yourself.
Not even myself. Yeah,
My Wi-Fi just cut out.
I refuse to be my own worst enemy.
yeah, exactly.
Good. That's totally needed in trading, but in life in general, right? We are our biggest critic, and we can hold ourselves back by being that critic instead of being that uplifting person, being nice, loving ourselves. Usually, right? Generalizing here, but you get the point.
Yeah. By the way, guys, I'm back in gold as a short. So, $30 down.
Okay. I take your trading for survival. That's how you
I am
sound,
literally
William.
trading for survival.
Okay.
That's an awful feeling, man.
It is.
Yeah,
I think
it's
we
such.
all have been there.
Are you guys in any
Where
trade?
I was in a euro long,
Okay.
which played very nicely. I'm currently in any trades.
Rich was talking about
This is
NAS
gold.
100 shots. I want to know, like, you don't consider bank holidays or anything like that, like when you're trading these indices?
So what happened was I wanted to take a short this morning
Okay.
during the London session. I'm testing a new strategy, and I wanted to see whether or not I could actually replicate it on a live account. And what I did was I was waiting for on the 15-minute for price to start printing lower and then attempt to push higher and then continue printing lower yet again. So I was looking for a drop base and then another drop. So I ended up taking a short here with the intention of having my stop loss being close to this swing point and then aiming down here. But what I ended up doing, instead of making it, and it just shows my inexperience when it comes to trading indices, instead of putting a 50 point move, so 500 points on, or 5,000 points, sorry, on TradingView of MetaTrader, I ended up taking a 500 point stop loss. So the moment I pulled my stop loss up and I entered, the trade closed. But this is what I was looking for.
Hopefully, it didn't messed up with the lot sizes. Maybe
I've done that before.
Small.
I did that with gold once, which, man, I wanted to risk on gold $100, so a 0.1 lot size, and I 10x'd that.
Whoa.
And I only realized.
Hopefully one.
No, I realized that I had made a mistake after I looked at my P&L after a while. I went away and I came back and I looked at my P&L. I was like, I'm $250 down on this trade. How am I $250 down when my stop loss is $100? What? And I freaked out and I looked at the terminal and I just looked towards the left because there was definitely a stop loss. But when I looked at the volume, I was like, oh no. I closed it immediately. Closed the trade immediately. It was a $250 loss. It is what it is. 2.5 times what I wanted to risk. It would eventually have gone into my favor and it would have been a $2,000 win. But I don't reward mistakes and bad habits. So I don't trade in hindsight. Unfortunately, that trade is one of those trades where I'm going to write it down as I made a mistake. I'll move on from it. I'm not going to re-enter anything. It's the same with this one as well. I made a mistake this morning. I'm not going to reward the mistake or the habit of not checking and making sure. I was supposed to make sure about the stop loss before I pressed enter, and I just put in 500 and entered. It was supposed to be 5000 and then enter. So, not to be harsh towards myself, but it's how I'm going to ensure that I don't make this mistake again. I need to reinforce checking, double checking, and making sure before I press enter. Because it could have just as easily have been a massive loss. Doesn't matter.
Yeah, absolutely.
I have eliminated. I think it may have happened to just about everyone trading, where you're making a mistake of 1 digit, and that may not sound like a lot, but 1 digit is can be 10x easily.
Yeah, 100%. It can be make or break.
And yes, and imagine if you're risking 1%. I think Samir, you've been seeing sometimes you risk 1%. Imagine you make a mistake, 10x that. So in one
I did that
click,
actually.
in one click, you basically risking the whole account and everything you worked for.
Exactly. I was having 2 live accounts. One was $20,000 when I started my journey, when I became profitable. And one was $100,000. I accidentally put it the same lot size in 20,000 as well. That was my first live account actually that I ran for 6 months. So, but at the same time, I was having that 100K account. So, it didn't really bother me that much. But if that was the only account, it would have hurted me. But emotionally wise, I really felt nothing, to be honest. I was chilling only.
Yeah, that's fair, man. Happy days. Right, guys, I'm going to have to love you and leave you. I'm going to have to go find where Ewan is because he's just tried calling me. So, I got to go. Apparently, you can't pick the car up until I'm there. So, guys, I'm going to have to love you and leave you. And I shall see you all tomorrow, hopefully. So, see you later.
Before you go, don't forget the gold trade you opened a couple of minutes ago.
Yeah, I got it all on my phone. So, I'm literally going to pack everything up and sprint over. All right, nice one, guys. See you later.
Right.
Take care, William. Take care, William.
Bye.
Next time we see you, William will be in a 5-star hotel. I'm sure of that.
Misha saying it's fine. You can risk 100%. Just never be wrong. Yeah, gambler, make gambler.
But in reality, reality hits you harder.
Normally, I've yet to. Well, it has happened to me a couple of times, and maybe it is my memory. But just about all the times that I made such a mistake, it never went in my favor. It was when either I see it when I'm in drawdown and I close it, or it just goes to the stop loss I never realized and it closes as well. But it never went in my way like magically, and I get a TP that's 10x what I intended to have. I don't remember, or maybe it's my memory, but I don't remember that happening. Usually it's always against us. There's one thing I wanted to say though, Richard, and I think this is valuable for those listening in. And if you are listening in or watching us, remember to hit the like button, subscribe to the channel. We are going to the 90,000 milestones with a top speed of 300 miles per hour, and you can speed that up even further. So don't forget, giveaways coming your way soon and sooner if you hit that button, that subscribe button. Coming back to that little anecdote, or maybe even a little lesson, I was going to ask you, Richard, how do you enter your trade?
The one this morning, or the one on the dollar?
Generally, what is your plan? What do you do? What platform do you use? How do you enter manually? Do you click on the mouse? What is the process? How do you enter with TradingView? Some people have it on TradingView connected to their MT5, and they enter on TradingView, but the trade is actually executed on MT5 through some kind of a bridge or connector or something. How do you do that?
Okay, so here is my 5K account. I have not taken a trade on it since I've bought it. I bought it last Sunday, so it's a week in and I haven't taken a trade. But how I would do it is I would generally have my lot size ready and waiting, and this is the first thing that I check in the morning. When I open up the terminal, because it resets every time you close the terminal, I'll make sure that my lot size is correct. Then I will wait for my setup to align on TradingView, because that is where I do most of my drawing and most of my analysis. And then based on that, if I start seeing my setup is busy getting ready to print, let's rather say, I will go over to TradingView, to MetaTrader, and I will wait for the candle to close, and then I will click either buy or sell. The moment I've clicked buy or sell, I don't drag the stop loss into place. I right click and say modify or delete, and then I will modify from there exactly what it is that I need to do, be it put my stop loss or my take profit into place, and then I would generally have a look and see, okay, this is where it is on that little tick chart.
Okay.
And then that's how I enter, and then I will leave it.
And how do you calculate the lot size?
Oh, I have my own spreadsheet that I use to calculate my risk based on... so before I enter a trade, I know exactly how much I'm going to be risking for every trade. And I know exactly what lot size I'm going to need to take to have that risk be in place.
So all of that is way in front of, way advanced before you're actually going to be hitting the
yes.
enter. Okay, all right. Because there is one thing that you could, not only you, but anyone, maybe not, or maybe you still can use it and have an advantage of it, but especially anyone watching us at home, there are tools you can use to enter your trade with a max lot size built in, meaning you can never exceed that lot size. If you know, for example, from your strategy, you're trading between 0.1 and 0.2 and somewhere in between, you put that limit, a 0.2 there, built in, and it can never go beyond it. That's one thing. And one of the things that I would recommend, this is not the only way to do it, but this is, I believe, so far as I know, the best way to do it is using, it was before an indicator. Nowadays, it is an EA, and you can find it at, let me see if I can remember the name of the website. I think it's, no, forgot it. I'll have to check it out, but it's PSC, Position Size Calculator. I have to look it up what the website is. I've mentioned this so many times, but somehow...
Is it this one, Victor?
Yes, but the website for people to go to and
it's
to
at
find
earnforex.com.
Earn Forex, exactly. Yes,
down here.
These at earnforex.com, not affiliated, but there it's a free it's a free tool I still use the indicator, but the EA works the same. And you can, if you open the tab trading, the last one, yes, and I can't see your screen because it's a bit small. But
I apologize. It's a 4K screen, but yeah.
No problem. No need to apologize. There is a max size there, right?
Yes, max
A little bit
volume and max
Yes.
risk.
Right, that's exactly right. Right, so you can put that. That's one safety measure you can put in, so you will never exceed that, even though it might be a little bit higher than you wanted. It has a ceiling. That's one thing, and the other thing is, you can actually enter with hot keys, meaning you go to the first tab exactly, and then you can enter your entry price, or at market. If it is a market, it is whatever it is whenever you hit the entry key, and then you can put in advance the levels, the stop loss and the TP in advance, the same way you do with your spreadsheet. You can do this, or maybe you can do this after your spreadsheet, and then it will give you right away there what your risk is and what your risk reward ratio is, and you can review everything. And there is also a chance, I can't read it, but you can also visually do it, meaning you can make the lines visible. Let me check on my side, which
So the stop loss is a little green line, and then
Yes.
the take profit is this little orange line.
Yes, I changed the colors because green is not the color for danger for me, and I don't think it is for many people. So
How do I
stop loss
check
is
the color? Do I
you
just
go
change
into
the stop?
No, I don't know. I don't know if you can change it there, but you go with F7. Press F7. Oh, there you go. Wait, you did do
Yeah,
it. You go to
you can
F7,
right-click.
and there you can. Yes, but you can also do it in the settings. The F7 setting. If you press F7, and you can choose the colors right there of each element. So the stop loss, you could do that red, which makes sense to me. It's danger. And green would be your TP or whatever. You decide the color. And you can actually double check, because sometimes it is a level, like something you calculated, a number of pips. But a lot of times that it is, in my case, it is a structure on the graph. So whenever I choose it, I see the graph and actually make sure that that is the level that needs to be, that visually it makes sense. Not only the numbers are, because there is a chance of human error when we
Yes.
move from our spreadsheet or our piece of paper or whatever, however people do it, and they impute that number, these digits, into the keyboard. We all make mistakes typing, whether it's 1% of the time or it's a tenth of that. It doesn't matter, but errors are made all the time, and you want to minimize that as much as possible. So you can set, if I'm not gonna there are ways, I'm not gonna go into the details, but if you read the instructions on the website earnforex.com, you will see how to set the hot keys as well. So you would let's say you're ready to get in, and it could be something like control A, let's say, of action, or control E from enter or entry, whatever it is you want. You can set the whatever it is, the shortcut. So you basically quickly you can get in, but beforehand you have the risk control. You can have the maximum stop loss distance maximized, meaning there is a limit, the risk also a limit, and it calculates basically the lot size for you as well. So you don't need a separate spreadsheet to do so. And you can save the setting, the color, the risk, all of that in a setting file. So it always is the same until you change it again. So no matter if you open it just for the first time, for the third time on the same day, it will have the same settings all over again. So basically, you don't have to change anything. There's another thing actually that is quite nice of it. If you go to trading, to the tab trading, there is a space where you can put comments. Normally, comments are not available all the time. You can also put magic number on your own manually. There's no way of open a trade with a magic number, but here you can. And that magic number, you might ask yourself, okay, what's the magic in that? Well, you can, with some journaling, or you can link the magic number. You can use it as an identifier for a trade management tool, like a trade management EA or indicator. Not indicator, EA needs to be. And so you can identify this trade, only manage these trades. So you can differentiate which trades by using different magic numbers, which trade it needs to manage. That's one thing. And in your journal, you can also, let's say in the MyFX book, which is a free tool, which I recommend everyone to begin with, to start off with, because it's free and because it's very good, not affiliated. The with the magic number, you can group certain trades. So basically, if you have, like, let's say you have 2 or 3 strategies, or perhaps you have one strategy but 2 or 3 different variations of it. One has a different entry, the other one has a different TP, or whatever it is that the difference is. You can then enter each one with a specific, all the time with specific magic number, and that automatically will be recognized by, for example, MyFX book, where you don't have to select which trade belongs to which, because you already put the right magic number on them built in with the position size calculator. It sounds like I'm selling this product. I'm not selling it.
It's pretty good,
free. It is good.
Good.
You can see that I used it because I talk so much about it. And actually, I did a webinar on the 5th of November last year on risk management. You guys can check it out on YouTube as well. And I spend about 10 minutes or so on the position size calculator. Those who know the tool will already know the value of this. I do not enter my trades. Well, there are exceptions, but my main strategy, I do not enter without the position size calculator. Period. I do enter on other moments, on other strategies, but this is the trade that I was talking about. That was a beautiful. That I'll come back to that later. With the market cap going and beautiful move. But so I do not enter on a main strategy without that tool, and there are other exceptions where I don't use it, but I recommend everyone to at least try it and see what you can, how it can help you, because it will help you. I'm positive of that. If you guys want to know how I made this trade, let's take a look. And you might see.
Sorry, Victor. Before we have a look at your trade, I need to shoot off. I have a birthday today. It is my mother-in-law's birthday, so I need to go and get dressed so that we can go out tonight. So I don't want to be caught off guard and be told you're late. So, I'm going to leave you guys. Thank you very much, Victor, for the information with regards to the trade position size calculator. I really love that EA specifically. I've introduced it for the idea of learning how to use it properly. But like I said, I do have a spreadsheet and everything already in place for my trade specifically. But I will find a way to incorporate it. And if it works better, then obviously I can just switch over to it. But yes, thank you very much for the information. Samir and Victor, have a lovely day. I will see you guys tomorrow.
Before you leave, Richard.
Yes, sir.
Congratulations. I don't know, in your culture, it is normal to congratulate everyone around the person who is whose birthday it is, but congratulations.
No, it is not. In general, we celebrate the person whose birthday it is on the day. But no, we don't generally celebrate. Maybe we should. Maybe we should start doing that as well.
Congratulations. Yeah, I congratulate you for having that person in your life who is, turning another year and you're celebrating that person's presence in your life.
I like that. I might just steal that. I'm gonna start telling everybody congratulations. You get to meet.
I might can
part of
steal
the
that
normal.
also.
Right, guys. Have
All
a
right,
great
perfect.
day.
All right,
Catch you tomorrow.
Rich. Take care. Bye bye.
Cheers, Amir. Cheers,
Take
Victor.
care.
Goodbye.
All right.
All right,
I
so
took a trade actually here
you
when
now,
was,
right now?
Yeah, I just linked my trader weight to TradingView, so I can execute
Okay.
trades, directly from
Yes.
TradingView.
Would you like us to switch to yours? And I think we just did.
Oh yeah, thank
Remy
you.
is quick. Remy is quick.
Remy is the
quick.
man. Anyways,
Yes.
yeah, gold, we are just printing higher highs, higher lows again. If you see the recent structure,
This is the
this
33
is
minutes
gold.
time frame.
No, this is 30 minutes.
30 minutes. It's kind
Yeah.
of small. Okay, no problem.
Yeah. So we are just printing, bullish moves here, higher highs, higher lows. This is resistance. So I got to the 5-minute and we was, consolidating like this. So I anticipated we're gonna break to the upside. My stop loss is very decent below this low. So I am anticipating this trend line to be broken and maybe retest this 4-hour area, or maybe this fair value gap. We have plenty of range. Yeah. Let's see if the volume continues. I can extend my TP. But yeah, now you can, take over. You was trying to explain something. Go ahead.
Yes, I was, but thank you for sharing that with us. Let's see. So you basically, before we move on, because I think people, gold is popular among everyone, and you're taking the trade right now, right in the action. I think we can certainly pause and go a little bit deeper into. So you use the 30-minute time frame, right? You didn't use anything above, correct?
Yeah, I just see the EMAs where they are, if they are strong and they are not, like crossing like this sideways, and they are not trendy, especially this 200 EMA. I don't try to take the trades on that. I know if we see, look at this. Look at the 1 minute on the MYM. Look at these candles. I cannot execute, any trades on this type of market behavior. But if you see gold, even if you go to the 5-minute, look at the impulsiveness gold is carrying. Impulsiveness and then correction, impulsiveness, little bit big correction. So I'm expecting one more impulse, and I don't want like too big of a target. This 4-hour resistance is once it hits it, I might can close the trade. And I have also seen if you place your stop loss below the 200 EMA on the 5-minute or 50-minute, it is really good stop loss. The chances of getting it hit when the price is trendy, it is really low. I'm not saying it works 100% of the time. I'm just saying it is really low. Like in this, choppy market, we cannot identify where gold is trying to go. But if you see this trendy, when 200 is down, you can take plenty of sales. Just place your stop loss above 200 EMA and then you're good. Maybe you can, take a loss here and there, but I do have a, different observation when the price is like this, far extended, how you can take buys also. Maybe later on in the live stream, I'll execute a trade like this live. Very simple. It is not really, I'm just expecting this consolidation to be broken to the upside. And why I'm expecting that? Because of the recent trend, 200 EMA to the upside, market structure is bullish. Very simple, not really rocket science. Very simple.
Perfect. Lovely. I like that. We can certainly keep coming back to your chart so we see how how the trade is going. It's
Yeah,
always
let's see.
excited and
I have multiple accounts. It's also, you can copy trade in multiple accounts in this thing.
You're only copying into one this time, right? Or are you copying in multiples now?
It's multiple right now. I just took this trade on 3 of my accounts.
And is that okay? All right. So there's a bit more pressure than usual because you trade one account at a time, I think, right?
Yeah, it is the evaluation actually. So I have to,
okay.
trade it anyway.
I see.
Yeah,
All
exactly.
right. So and how do you manage this? Do you set and forget? Do you just walk away and glance at it from time to time, or are you actively watching and waiting for something to happen so you can decide whether you cut it off before, whether you bring in
Mm-hmm.
the TP, or whether you
Okay.
put to break even the stop loss? Is there anything active you do while the trade is open?
Yeah, there is one thing active that I do. Suppose if the price tries to consolidate this way, try
Hmm.
struggle to move towards my TP, then I will close my trade. And on the other hand, if price, get close to my TP, I'll just move it to break even. These are the only two things that I will see. Other than that, if there is impulsiveness to the downside straight to my stop loss, I cannot really do anything. And if, straight to TP, then also I cannot really do anything. But yeah, if it is going, in a smooth, higher lows matter in this way, then I might can hold this trade. But again, my drawing is not really that good. So, if little bit of impulsiveness, little bit of correction is good, I can bear that. But if we have very big of a correction, then I don't want to see price, coming back to my entry point. And even this 200 EMA will also go something like this as we are consolidating. So then it can break that area also. So I don't want to be a part of that move. That is the only active thing that I'll be doing.
I see. Okay. Thank you for that. Thank you very much. I think those who are watching us would we're taking notes, and if you didn't get a chance, rewind and check the rules or the ideas, the suggestions that Samir is applying there, and check for yourself. Don't apply them blindly, but try it
Yeah,
out on paper without risk, perhaps, and then see if it's something you want to be using, if it's better than what you're using currently, and whether you want to apply it just like it was presented, or you want to adapt it, you want to adjust it to your liking. But use it as much as possible as a suggestion, as an idea, as a template for you to build your own set of rules. Hamid, how are
exactly.
you doing, my friend? How are you today? We have a
This
question
is
here
also
from
very good
Martin.
area for buy.
This is
Victor, okay, this is
Nas.
for you.
Yes, we have Martin is asking, can you tell again how to change the colors of the lines of the PSC, the position size calculator? You select the chart where the PSC, the EA is attached to, and then I don't have it on my screen because I don't have it, it's not on the trading view, but you select the chart, right? If you have the MT5 terminal open, you select the chart and then you hit F7. F7, that should bring up the settings pop-up window. And in there, you will find the settings, how to change the colors. You'll recognize it because there will be a small little box with different colors right there in the settings of the EA, right? So it is not on the chart. It's not one of the tabs because the settings on the tabs, you will not be able to change the colors, but on F7. Right, you can also right click and then go to EA selected and then go to the settings of that EA, but F7 is easier, it's a shortcut, and so on. So I hope that helps, Martin, and if not, then let me know, then I'll see if I can bring my terminal on. All right, so I was gonna say we were watching your entry long on gold,
Yeah,
Samir.
yeah.
How's Jackie doing, by the way?
Jack is good. He got excited, made some eggs, and then he was like, doing that small bark, like, give it to me also.
All right, so this is the trend line, I suppose, right? That you are.
Yeah, exactly.
Um, it looks to you like the market is the gold is going to break it and go to something higher. Perfect. I like that. Let's go to the trade. I'm sure people would like to see the trade that I took. That is
Okay,
the price.
euro dollar.
There we go.
Okay,
Yes, it's euro dollar. I start without going to the higher time frames. I start on the monthly on my analysis, but just let's go to the start with the daily, right? So if there's no daily, then there's no. I do start from the monthly, but when I'm executing, if there is no daily, then I don't have to even check the weekly and the monthly in terms of workflow, right? But for the analysis, of course, I want to go from monthly coming all the way down to the 4 hour. So I start on for the execution, I start on the daily, and the daily time frame we are in a bearish order block. At the time that the trade was on, it did not break that order block yet. So it wasn't here. It was somewhere, I don't know, somewhere below. So if anything, if I get a H4 or a setup, I should say, H4 setup, which then would be the beginning of my, my trade. If I get one which is bearish, the fact that we do actually, I have to correct myself. There is no bearish order block here. I had it on because of yesterday, but in my analysis, you can see, not in my analysis, on the price action, you can see that there is no order block there. So my apologies for that. So we can skip daily then because there's nothing there. Even there wasn't anything bullish, but certainly there's nothing bearish as well. Let's go to the H4. So the very simple, same as Samir said, it's no rocket science. At the beginning of the day, this is the beginning. That's my time. There you go. At the beginning of the day, when I start watching the market, I'm asking myself, do I have a quasi with an entry order block which is at play, or a fresh order block in that time frame? And we did have an H4 was created here and retested at that beginning of the day, of the trading day. And then I go to the other time frames that I watch, and we saw that the market, as we started, right? The market started for me at 8 my time, and at that time you could see that right at that moment we had an H1, which was also fresh within the H4. So you have that beautiful overlap. Let me mark it with the correct template. Let me see if I can have it there. There we go, and the other one as well. Right, so that's the level you want to be watching. So by the time the market started, it was already at play, and then I go to the 5 minutes and the other minutes time frame to indicate, right? So you have the beginning, right, earlier in an Asian session, creating that quasi. That's the lowest point from the graph, so that becomes the head, and the neckline is this, at least in this time frame. There you go. And that gives you an established downtrend, which is the prerequisite for. Let me change this, because I was explaining something yesterday on Discord, and I still have them at much bigger than I usually have. So I'm gonna be changing the colors to something a bit more bright and a bit less thick. Let's see if I can.
It was really nice trade.
Somehow I'm not getting into it. Doesn't matter. Okay, there you go. Now it is. I clicked it away. Silly me. Okay, so the style is here. Let me take perhaps this one and make it something much brighter. Maybe that will do. Maybe something like that. Yeah, I like that. Okay, so this is let me change that. There. So that becomes then it doesn't really matter that my rules tells me that this is the neckline, so that's why I'm putting it there. But of course you can see that that's the highest point, but that's not relevant to me because my rule tells me to start from the head and going back. So that's why this becomes the neckline, and it breaks the quasi line, telling us that there is a change in direction, and you have the H4, the H1 in this case, telling us that the price are likely to come back and to see the yellow lines that I indicated earlier. One is here and the other one is below there, right? So that's the area I want to price to come back. It breaks the quasi and it comes back to revisit that area. Now it looks like it broke it, and I'll explain to you, right? It looks like it broke it, but on the H1, right? Let's go there. On the H1, you can see that it never invalidated. The area is defined by the time frame. right? It never closed below that area. So to me, these wicks are just that, wicks. They don't invalidate the trade. So on the 5 minute, the fact that on the 5 minute it closed below does not mean it doesn't invalidate the area, right? So you have the quasi, which I just indicated, right? The quasi being like that. That's the established downtrend, breaks the neckline, goes all the way up to the top of that structure, and then comes down to one of these order blocks that was created as the market was reversing or buyers were coming in. And you don't know in advance which of the two is going to be used. In this case, it used actually this one, but you could argue it used the other one, right? That's up to you. And once you, in cases like this, I put my stop at the safest place, right? So I put it below the order block and I target this high, right? Which is, this is my first TP, which I didn't use in this case, but that would be the top of the structure. But I went and checked on the next level, because if this is a reversal, it's gonna go hit the next level, and the next level is, let me see if I can find a time frame. It's that swing point, right? So that's the next level that it may or may not break and continue further. And in this case, it did break and continue further. But when you're entering lower, that is not a fact yet. So you don't know that information, and you just want to be targeting something that has a high probability of being retested, which is the next swing point right there. And that's it. And at least I see myself as that's my job. My job is just to catch those reversals and target the next level. That's it. And the market after that, it can do any number of things, but that's not mine anymore. And so I don't feel FOMO now that it broke out and went this way. You could, say, well, this Victor is missing out on, half of its profits he left on the table. And that may be so, but I don't see it as such. I don't see it as mine. Mine is just to hit the target, and that's it. What happens afterwards, it's not mine. It's not my trade. It might be someone else's, but it's not mine. I don't feel anything about it. So
Yeah,
that's
exactly.
it.
That's how I think a professional trader thinks and react to the market. Moves are always going to be there beyond your take profits, beyond your stop losses, but you should be comfortable taking those moves and you should be okay with it.
Yes, you should come at peace, and the market has all kinds of scenarios and all kinds of chaotic randomness in it. Even though there are patterns, it's not completely random. But my job, at least, I see myself as a trader. My job is to not is to put myself in a position where I'm minimizing the randomness of the market when it gets to my performance. There's still randomness in the sense that I do not get to choose the sequence of the winners and the losers. We do not get to choose the sequence. But by using a fixed rule all the time, consistently, you minimize the randomness a lot. Not completely, but a lot. So, and it gives me a lot of peace of mind. Either I'm gonna hit the TP, or I'm gonna hit the stop loss, or something in between, because I may have rules that manage the trade actively. But that's it. There's no excitement, and I don't know which one it is going to be the next trade, and there's no what ifs. No need to. It's gonna hit my TP, it's gonna hit my stop loss, or something in between. I just follow my rules, and that's it. It keeps me. I feel so much better. I used to, wonder, why didn't I hold this? Next time I'm gonna hold it. That doesn't work. At least it never worked for me. And now, by just having these rules, it's so much liberating way of trading. Just walk away and let it be. All right, let's take a look at EU. Perhaps we can do some analysis. Hello, Infinity. How are you doing today? We see as well Angela. Angela says, no trade day is a happy day. Okay.
Exactly.
Davide Pedrini, how are you doing? Gianluca
Pedro.
Zizari. Maybe twice is safe. It looks like. Not sure what you're referring to, Gianluca, but Gianluca, thank you for coming in. Don't forget to hit the like and subscribe button. We are very, very, very close at hitting that 90,000, which will trigger a massive giveaway. So hey, it is in your hands. It is in your hand. It is something you can accelerate. So don't forget to do
Exactly.
that.
Share with your trader friends this channel. Make it to 90K, guys. We are very close to that.
Pulley, a good friend of ours as well in our Discord community, says the stock market is open today, just the bond market that's closed in the US. Since I don't trade equities, I don't have these details. So thank you, Pulley, for filling in on those little details. And all those who are with us today, thank you all. We have many Louis as well. Louis, how are you doing today? Mishail,
Louis.
I'm sure I'm not pronouncing that correctly, but Mishair, if that's how it is, or it isn't perhaps, but thank you for coming in. That's what counts. Perfect. Martin says, I cannot change the colors. Martin, about the Mac, I wouldn't be able to say if that's the case. Maybe so. But
is he referring to MT5 or the trading view?
He's asking about MT5 because the position size calculator is on MT5. My question to you, Martin, is did the settings pop up when you hit F7? Did you have an option to change colors? Yes or no? And if so, then I would expect that to be able to be changed. But I'm not an expert on using MT5 on Mac, so maybe it isn't possible. But let us know. And maybe on this or some other stream, we can come back and give you another option. Who knows? Perhaps. So let's do the analysis. You have is NAS already open for you? I think it is, right? Already almost half an hour ago, right?
No.
It's
the
still
timing has shifted, right? It's
okay,
1 hour.
Right. So
we still have 30
it
minutes.
means
Yeah,
30 minutes to the open on NAS.
exactly.
Yes,
Yeah.
as you can see, I don't trade NAS, so
Yeah.
time switches, and I'm still not up to date to the openings of these markets. So we have on the monthly time frame, we have a fresh order block that was created the end of last month, October, which reacted on a relevant structure to the left, meaning it gives it much more relevance as to how much weight we should put into this order block. It's a reaction on something much bigger, meaning we need to. Okay, so Martin is coming back to us saying, yes, it's pop-up. I see the colors, but it's not changeable. Okay, well, then maybe it is something of Mac. You should be able to click on the color, and it should be giving you options. That's how it works on Windows. You click on it, it gives you, a number of colors, just like, let me see how it is here. If you click on the color, it should give you like a palette, if I'm not mistaken, as well on MT5. Something similar to this, where you can choose you click on another color, and that should change the lines. I find that to be important because green as a stop loss doesn't make sense to me. Green in traffic is is to go, is something action positive, and red is danger. So anyways, coming back to EA, or not EA, EU. So we have a fresh order block, which is an important one. And we talked about this before. The market is telling us that the sellers are in control in this time frame, and it might mean, not it might, it means that so long as that doesn't change, the buyers don't come on very large in large number and volume and push price much higher and creating structures that indicate the opposite. So long as that isn't the case, we should assume that the market is going to go lower, either in the next candle or perhaps in some candles in the future. And that sounds like vague, but it's not, meaning coming back to the retest of the order block and then make the follow, so the retest first and then the follow through movement to the downside. But the more likely direction is to the downside. All right, so that's on the monthly. On the monthly time frame. All right, so Martin is I can change everything else, but no other color. So probably it's a Mac issue. It sounds like that. Yes, I have used it
Try to install
only on
parallel
Windows.
windows.
I
There
beg
is
your
a
pardon?
Mac, in Mac you can install parallels. It just, install a window in Mac. Maybe then you can try this thing.
Good idea. All the times that I've used it, and all the versions that I've used it, I was able to change the color, but none of these scenarios, one of those moments, were on a Mac, so I wouldn't be able to give you that side of experience, Martin. But yeah, maybe try that what Samir just recommended or suggested. So on the weekly time frame, what do we have? Do we have any fresh order block or quasis? This is the neckline for the quasi. No problem. And let us know,
Okay.
Martin, if you do try it and what the results was, because probably if you have the issue, many others would have it as well. I would certainly recommend using the position size calculator to anyone and actually everyone. I think it's such a saver, lifesaver. It has given me no problem. It has given me a huge advantage, in my opinion, by minimizing that human error of things, that's human error side of things. The other thing is it makes possible with hotkeys to enter quickly when I'm scalping with precision, because it calculates the position size on the fly, and with each tick the the position size is calculated and updated, so that I get exactly the size that I need for the risk that I want to be taking. It's perfect. I think it's a must-have tool on any trader's toolbox. Okay, so I switch right there, but on the weekly time frame, the why am I keep saying EA? It's because I was talking about the position size calculator, which is an EA.
Yeah.
EU, EU, the only fresh order block we have is the last one, is the bearish one above us. If we get there within a certain number of candles, we will then be looking possibly for that reversal for the continuation to the short, remembering that the monthly likely direction is eventually to the short side until things changes. Martin asked us, other question, do you guys use trading robots? EA, but as in robots. Do you, Samir?
No, I don't use any. From the day one, I've been using that web terminal for my position size calculations when I was trading
Okay.
other pairs. But when I came to Euro USD, GBP USD, I just do it from calculator. I think the amount I want to risk divided by the points. That's simple. For gold,
Perfect.
for euro dollar, GBP USD, I calculate my position size this way. But if it comes to the other pairs, these JPY pairs and all, I just use that web terminal. From the day one, I've been using these type of things.
But I think the viewer is asking about strategies that are, so the position size calculator is more of a tool, a management tool that helps us do something better, faster, and so on. But as a trading robot, I think he is referring to that's a strategy.
Got it. From the day one, I don't know. I have never believed trading robots works. I have never used it. I don't like this idea of, this robot thing. Maybe you can get a kind of a data from any kind of a robot or EA. I don't think so. You should fully automate your trading. I don't think so that is going to work out in the long run. It's just my personal opinion. Of course, there might be people in the world who are successfully doing it, but I don't know about them. If you ask me, my opinion, I don't believe in trading robots. I don't think they work they're gonna work for the you can say in every market condition or for the long term use. I don't think so. You should keep it for the long term use.
Yes, I understand you completely, and it's rightfully so to be skeptical and critical of trading robots, because I'm probably pretty sure the experience you've had, and most people have had, are with these commercial robots. They commercialize, they offer out there on the internet, buy this robot and it will give you this kind of graph, and they will show you a perfect graph going to the moon, and tell you it will get you this gazillion pips per week, and it has a 90 whatever win rate, and so that side of the industry and those robots, you're totally right, Samir. They are
Mm.
not as profitable as they uh, are advertised, and even if they are profitable, that's another thing. Most of them are not even profitable.
Yeah,
So
exactly.
yes, I totally agree with that.
Mhm.
However, an EA, in essence, or at least this is my experience, an EA, a robot, is in essence just a coded strategy. So let's say I have a strategy, and some people, it may have discretion to it, meaning it's not a fixed rule, but
Mm.
they, per case basis, they decide whether they want to go long or short. And there's not a hard rule. It's not really completely codable or easily codable. But many others are trading mechanical systems where you're applying the same rules over and over again, meaning you look at a daily, you do this, you watch the last high, the last low, you do objective things that are rule based. And if it is a rule based strategy, if it's a mechanical strategy, then it is able to be coded. So in the simplest form of the definition, those strategies that, if someone is trading a manual mechanical strategy, it could be in principle converted into a robot. It would be a proprietary robot, right? The person designed it by himself. It's not didn't buy it anywhere, and those will work just like any mechanical strategy. They will have their good moments, their good periods, their good runs, and they will have the profitability will fluctuate like any other mechanical system, and some of them might have long-term profitability. I have, I have, I trade. My main strategy is manual, but I do have multiple strategies that I built myself, and that they are coded into robots, right? EAs, and I don't share them, I don't sell them, I don't commercialize them, because they're only for my personal use, and they are, you know, uh, they're profitable, and you know eh, I have stats on as to what the long-term longevity of them are likely to be in the future, but I'm pretty sure they have a good chance in maintaining profitability, because that's what I've measured in the past, and all the robustness tests that I have done upon them. But yes, they can stop having edges at any given time. Market might change, the edge might by just shift, and they no longer have an edge in the market. All of that is part of the game, and that's normal. So to come back to the question, do I want to use? Yes, I use. Trading robots, I don't talk about it because there isn't a lot to be said about it. It's not, it's not available for the public. So why would I be talking about it? It's imagine a store advertising something that's not for sale? Why do you advertise? Why do you talk about it? But so yes, let me go check. So let's go back to the but the commercial ones, that's the one that most people have contact with. I totally, you know, totally convinced that the vast majority of them are not what they are advertised to be. If someone has an edge in the market, they're not going to be selling it for a couple of $100s. No way, Jose.
Yeah,
That's not going to
exactly.
happen.
It is just common sense. I don't know why people buy it.
Exactly. If you have an edge in the market, a mechanical edge, you're not going to be selling it for a couple of $100s. Probably not even for a few thousands. It's not going to happen. You have an edge. You have basically an ATM on the market. Yeah,
Exactly.
that doesn't make sense. So, anyways, let's go back to EU. So I was on the weekly time frame. Let me do a step back though. EA. Well, actually, let's leave that because I can continue with that topic a bit more, but that's perhaps another day. So on the EU, the last structures that we have is the let me change the color of this as well, because I think it's not catchy enough for my taste. So let's change it to something like so, and perhaps not as thick. All right, so yes. So the last structure we have is the weekly order block, which is within the monthly, that has had a initial retest, but is still in the runnings for another retest that could happen in the next couple of weeks, next couple of candles. And I would be looking for a short from there if and when the market then starts to print some reversal patterns on the lower time frames. Other than that, there isn't anything, right? We do have a structural break, which is a not natural but logical target for market to gravitate towards, which is that weekly structure we just see. The line, structural line right there, haven't been touched yet. So the market is still on the weekly time frame in an uptrend, even though the momentum currently, the order flow is to the downside. So on the daily time frame, let me move another step lower. We do have a quasi that we talked about. We have actually on both sides have reversal patterns. This is the quasi established downtrend, break of the neckline. That's the neckline, break of it, and it comes back. And we don't have anything to the left. So to me, there isn't anything yet based on this structure, based on this pattern to go long from, unless we start reaching this area and then give the sign that one side is taking control, and that would be the buyers in that side. So to me, the pattern is there, but it's not at play right now. And yesterday we almost, and that's why I was talking about that on the Discord, we were printing at that moment, we were showing, not printing, showing a bearish engulfing, which could have been the beginning of the continuation to the downside. However, it didn't print in the end, right? That's the importance of not trading something you see, of trading a moving candle. It could be a trap. So at the close of the market, it closed as a small body, as you can see here, small body candle, indicating indecision, and the market for sure was not, the sellers were not winning the battle, so to speak. So there isn't anything on the daily other than the structure above us, which by the time it gets there might not be even fresh anymore. So the daily time frame not giving us any indication. The H4, we have the structure I just indicated, which was the setup right there, which was retested in here on the next candle. And on the 1 hour, that coincided with the order block, which was created and retested here at the beginning of London, which is why I took that trade. We just went over it. So if you want to see it, reverse, rewind a little bit, and you get the explanation, the why I took it, and the and what happened? The fact that it went to the next swing high, that's fine. I'm just just looking to look for the next target, the most likely target, and sometimes it overshoots and continues, but that's not always the case. And in those cases, you're going to be very happy you just took profits at the first level, because sometimes it comes back and you're left with hopes but no profit or very little profit. So that's EU. Basically, on we have a breakout with a close on the H4 above this line, right? That close there above this line, indicating that the market, the buyers are in control and are likely to be pushing higher. The only thing is, before it continues, it may pull back, maybe come back to this line for the break and retest, but perhaps another, because all of them have been broken in the same candle. So perhaps coming back to retest and then continuing higher. Probably not today. Let me check the ATR so we can get a reading on that as well. The ATR today is telling us, I'm going to take away these arrows, so I'll make sure I'm measuring it correctly. Right, so the today's ATR is at 58. I mean, the range of today, and the daily ATR is giving here on the ATR indicator, it says 58 as well. Basically, it hit 100% and retraced. That's the power of the averages right there. So I think it's still early to say this is going to be the top of the market for the day. It can easily, push another few pips above, but I don't think it's gonna, go all the way unless something huge happens. But maybe just retraces, and who knows, stays here, and then perhaps tomorrow or Asian session continue that trend to the upside. Martin is talking about the trading robot who is testing a bot from 2025, or tested from for the year. The back test 80K, so made a 50% return on an 80K account in back testing. And
That's amazing return.
He's doing a forward test. Let's see it's going to be. Nice, Martin. There are a couple of things you can do, by the way, Martin. You can play with, in the backtest, play with some adverse conditions. For example, do the backtesting with a wider spread, for example, or with a worse execution, meaning that it's not going to respect your stop loss. It made 210. Wow, that's even better. Where it stops out, that you get, assume a slippage of a pip or two on your, when you get stopped out, and that your TPs are slipping against you steadily. These are just worst case scenarios, but they will give you some ideas of how robust the system is. Also with the entry, right? So a wider spread, some negative slippage on when you enter. All these, basically stress test the strategy for worse than optimal conditions or execution. And there are other things you can do as well, Martin. One is you can apply the same strategy, since it's a bot. Doesn't take you much to test it on another pair. You can test it on another pair. So I know you're trying to use it for EU, and that's great because perhaps it's optimized for EU. But test it on another pair. Let's say GU, dollar yen, any number of pairs, because if the idea behind it, if the strategy actually has edge, not by chance you're measuring positiveness or profitability, but it actually has edge on the market, it should be profitable. It's likely to be profitable on other pairs as well. If it's only profitable in one pair, and the same principle applies to the time frame, right? If it's only profitable in one pair, I would highly doubt that doubt the strategy. It's not, if something, if a strategy is profitable, it's likely to be profitable in multiple pairs. Maybe not all, but you will see they keep on break even. They'll be less profitable. It might have a couple which it's very good at, but they're still profitable with others. If it's not profitable on the rest, then something is not right. That's one thing. You can apply the same test with the time frames. If it's only profitable on the, let's say, on the 15 minutes, but on the 5 minute it isn't, the 30 minute it isn't, on the hourly it isn't, something is not right. Same principle applies. If something is profitable, it may have time frame and pairs where it is more profitable, but it's not going to be on just one isolated time frame and all the other not profitable. That sounds like curve fitted a strategy, meaning it's not going to have not profitability on forward testing, or it will just crash after a couple of months. So all right, so let us know, Martin. Let us know. And by the way, Martin, are you the Martin from our Discord community? Because there is a Martin who is very regularly visiting, a member in our Discord community. Maybe you are, maybe you aren't. Let us know. It will be nice to know if that's the case. All right. So that's EU. What are you looking at, Samir? Are you looking at NAS as it is going to be open in about 7 minutes? Are you?
Yeah, I'll be definitely looking at NAS 100, as I do have Forex accounts also. I'm just going to add, okay.
Yes.
We are pumping to the upside right now. I do use different trading for this, so my colors are a little bit different. So we are going to the upside here. So let's see if we take out this liquidity and then we can come down. Maybe today's the day my liquidity strategy can play out. Again, I don't want to capture the whole, I don't even expect that. I want to capture a small move right from this area. And where I will be looking for my entry is above this area. I want the price to liquidate this area. And if you see, we have a very good order block right here, or the supply area. Ideal sells will be here. But of course, if price, tries to reverse from here also, then I will be interested in sales. Sometimes it doesn't need to, go all the way here. Of course, maybe if, I get stopped out here, I might can give another chance at this area. So today, NAS, it's a US 30 actually. US 30 is looking very interesting today. And the price action is really good. Why? Because we have liquidity point, very clean liquidity point right from here. Market dumped like crazy, as you can see. So now this I can use in today's session as a liquidity point. And this is a very good area for sales. Amazing. Market is in a very good state today. And the US 30 is looking really good for sales. And as one, we do have these liquidity points. We have another liquidity point, but this is way too close. Supply is already tapped here. So this will be ideal for the liquidity point. So I will keep US 30 on my watch list, my main pair for today. US 30, once we breach this area, I'm going to be looking for sales. And I have mentioned a couple of times, so what is my entry criteria? My entry criteria is very simple. Price closing below the fair value gap. Let's say price moving up, and this is the fair value gap. Price closing below the fair value gap, and just wait for the retest. And I just sell, and my stop loss can be above this area, and I go for 1 to 2. This is my entry criteria. Once we break this high, then I'll be looking for this thing. Yeah, yesterday was really choppy day, as you can see. No, actually, yesterday also was a winning day. This was a liquidity point. I was marking this. I didn't trade yesterday. So if you go to the 1 minute now, I will show you the example. Okay. This was a fair value gap. Price closed below, and look at this wick. It retested. I would have taken the entry. My stop loss. Something like this today also. So something like this.
What time frame do you use the 1 minute for your entries, and the What time
1
frame on
minute.
the? Is that the only time frame you look at?
Yeah, for the entry criteria, I look for 1 minute fair value gap. Once price close below it, and it should be a little bit impulsive. Like price should leave a fair value gap. There are small rules I built for myself so that my win rate can increase, and the fair value gap should be also in an impulsive state. Sometimes there is a big consolidation and there is a small fair value gap. That type of fair value gaps doesn't really play out well. So these impulsive moves, impulsive pushdowns, these type of things works good. So I missed this trade actually, but today I am looking at the similar thing like this. Yesterday was a good day. If I talk about my liquidity strategy, and areas are really good, which price is on. So selling will be really amazing. I might can take a risk entry right here also. If price, pushed way too higher without giving us pullback. So I can take a risk entry right here also without
A
waiting.
risk entry. Is that a
Yeah.
different kind of entry than what you just explained, where you have the fair value gap that gets broken
Yeah.
with another while creating another impulsive move? Is this
Mhm.
risk entry different than that one?
Yeah. The entry criteria is a little bit different on this one. Why? Because this supply was never tapped and this is way too clean. These type of supplies have really good win rate. I've seen, my pattern recognition has built this way where I've seen this type of pattern, performing well, not 100% of the time, but a little bit more than 50%, let's say 60%, maybe 65%. So I can take risk on these type of areas. So today is the day where I can take risk entry as well. And if I go to the normal entry, which is fair value gap, and that is very simple. I just explain you gave you the example right now. And one thing also is there that fair value gap needs to be above my area. It doesn't need to be below this. Like let's say fair value gap prints right here, close below. We cannot take this type of fair value gaps. It has less win rate. Sometimes it works out, but why to sacrifice your win rate when you have seen this type of thing a couple of times? So fair value gap appearing above this area, that will be good. USD looking very clean. Yesterday also was a good day, but I missed the trade. And yeah, like let me give you one more example. What I'm saying. This was a liquidity point. Price broke out, and now we go to the 1 minute time frame. Let me give you an example. Okay. Okay, this was a fair value gap, but again, I said, if it is above the level, we cannot take it. And look at the impulsiveness is fading. So this was also the plus point for this strategy. Again, very choppy. But here, if you see, my criteria met. Impulsiveness came and there was a fair value gap. So once price close above the fair value gap and look at the retest. So these type of areas that I want to capture. I don't place my stop loss too tight. I do give it a little bit room. And what can be the target? Another liquidity point, but I go for 1 to 2s only. Straight to 1 to 2s. These type of areas. You might can ask, there was also a fair value gap. Small, actually there is no. Let's just consider this one. I already gave you the example. Why I don't take these type of fair value gaps? Because it has low win rate, less win rate. These type of fair value gaps really works good when we have impulsiveness in the market, and then price print the fair value gap and close above, these type of areas. And also you can use this 200 EMA as a reference. If price is way too extended, then you can expect a pullback towards that 200 EMA. So this is the similar thing that I'll be looking here today. Okay, we are actually almost close to that area.
Oh, maybe we can see you analyze and execute live in front of us. This is
exactly.
the 5ers live trading room for a reason. Because we are real traders, interacting with the market. But even I trading live, that usually I get my trades around, not exactly during the stream, but before, after I put on my alerts. It doesn't happen very often that I'm in the stream that my trades are. It happens from time to time, but now we have a chance. Oh, we broke there.
Okay, we broke this level, and now let's go to the 1 minute time frame. See, this fair value gap is below this area, so we cannot take it. I want the price to tap this area. That will be good for sells. Again, similar thing that I explained, we'll be looking for something like this. The fair value gap is below this, so I cannot take it. And one thing also I've noticed.
So that's a hard rule. The fair value gap up below the level to be broken is not a good one.
Yeah, it has like very less win rate, probably 30% win rate. So why to risk, money on this type of area or this type of setup? And there I was gonna say one thing I've noticed: these type of setups happening 1 hour after the market open, or maybe 30 minutes after the market open, they have really good win rate. Let's say 1 hour.
The market is open now, so that's why the market is jumping like that. It is
exactly.
the open 2 minutes ago.
Exactly.
Gold,
here, I think
gold as well is moving a lot.
Gold is going against me, so I have closed the trade. By the way, I have booked the loss on gold. Let me show you. Okay, once we broke this area, I actually closed the trade, and my execution was somewhere around here. Actually, my stop loss was here. I didn't like the volume, look at this volume. So it is high likely my stop loss is gonna get triggered. So I closed my trade here. Kind of booked, if I was risking 1%, I lost like maybe 0.6%. Yeah, close to that. Oh, okay.
Perfect.
US 30 is looking good, yeah.
Yeah, the open changed the sentiment completely on gold. Indeed, yeah, the gold was ready to break out, so it seemed, but the open, the volatility, that happens a lot, right? At the open, the U trade NS, NAS, I mean. So right at the open with London Open as well, in GU and EU, London Open, and it does a number of things the first 15-20 minutes, sometimes half an hour to an hour, and then chooses the direction, which might be completely different than the first half an hour or a 1 hour, which you thought you were completely convinced is going to go one way.
Yeah, exactly.
It goes the other way completely. And that could be the case on gold as well, because I did see indeed how bullish it has been. But right now it seems to be going the opposite ways. Actually, it took out the Asian low. If I'm not the Asian low, but the one a swing point low on the Asian session at the end of the Asian. That's on gold, but
this GU is looking good. Yeah,
GU is looking good for
buys.
For long for you indeed, because you're looking for that low of yesterday's low to be taken out and then come back with a vengeance, so to speak, where you try to read the fair value gaps to get in on the opposite direction when it comes back. And there is do you see any entries on GU in that case?
Yeah, as I have built my bias based on some liquidity moves, as we have taken the daily low, we have this fair value gap. So once this candle closes tomorrow, you can look for a wick to come a little bit down, and then to go to the upside. So now you have to analyze the market. What are the pullback areas that you can see? Let's go to 30-minute. Okay, this is a good pullback area. So if market decides to come today, then I will be taking this trade. I don't keep my stop loss too tight. I've learned my lesson, so I can give a little bit room, because we have plenty of targeting range. I don't even want to target this. Let's stick to 1 to 2s. So this is what my trade will be looking. Maybe we can get a pullback today.
That would be something for today or for tomorrow?
If today it appears, that's also good. It's valid, because bias is there, price is going to the upside. I'm not looking at this move, as I have explained a couple of times. that whatever price is doing recently, I focus on that market structure. I don't focus on the previous one. So right now we are, moving up. This is a liquidity move. So now I'm just planning for my pullback area, and then we can take the entry. So GU is also looking good. I'm just gonna market USD and a market 2 pairs I see. USD I'm looking actively, to be honest. I do want the price to tap this area in maybe 30 minutes, 20 minutes. If it is triggered, it will be a good selling area. And NAS 100 is also this 70% can give you a little bit of push to the upside. You can capture 1-to-1 maybe. Yeah, this is also, I've seen a couple of times this strategy. So I use multiple strategies, as you can see here. So why I do this? Because I have realized being dynamic in the market is not bad. What do I mean by that? Is sometimes the other things are clean. It is again just my opinion, guys. So you might can think differently. I'm just sharing my 6 years of trading experience that I've seen in the market. Sometimes the setup is not there, and sometimes you can force it. So this prevents you. Whatever is looking cleanest, you can execute on it. So this is type of the entry and risk reward tool that I just have drawn for you guys. Again, you cannot really enter randomly. You just go to the 1 minute and wait for some rejection, some fair value gaps, and price closing above that areas, and then you can plan your entries. Again, if GU just continued on a bull run and they stab this fair value gap, then this area is no longer valid because whatever target I have marked on the daily time frame, it has already reached that area. So now you cannot really, use this area. It can break, it can shift the market structure because on the daily time frame, we are bearish actually. We are bearish, so we can again move bearish from this fair value gap. So that is also I'm keeping in mind. So let's wait how this market, behaves. What you guys are looking at today, let me know in the chat. Rosas has a really good question.
Let's go to that. Rosas, yes. Rosas is asking. I think you have talked about it. I think you are a you have a specific way of doing is. I think it's interesting for the viewers to listen to Samir about your funded account, right? You've talked very openly about your funded accounts, how you are not you don't of course you value your funded accounts because that's how you get the payouts from, but you also understand you've made it clear that you're okay with you know that they don't last for your experiences, that they you can replace, they're replaceable. When you lose one, you just get another one, and relatively quick, I think, or actually very quick. You get them back. But how do you manage that? This is the question. Let me put it up here. How do you manage with the profits? Do you leave some for buffer? Do you withdraw everything to the initial balance?
Okay, Rosas, again, that is a really good question. And I will tell you a little bit about my journey. So 2018, I started my journey. 2 years into my journey, I passed my first funded account and I got the payout from that funded account. So how I got the payout, I don't know. I didn't knew about myself that once I see 2 to 3% or maybe 1 to 2% in my account, I stopped trading it. Why it happened, I think, because I was having nothing to my name. I was not that greedy. I just wanted to secure something from the market. So my nature was from the day one, when I got the live account, I just want to withdraw some money because I have nothing. I have nothing to my name. And I have never withdrawn money from trading. So from the day one, my nature with trading has been make 1 to 3% and then wait for the withdrawal. Just leave that account. Don't trade that account. And let me tell you one thing. I have made countless mistakes in this, maybe getting that 1 to 2%. I have overtraded. I have over risk sometimes. I'm not afraid to admit sometimes my withdrawals are in the past. It has came this way. But the thing I got the withdrawal was just stop. I stopped when I was seeing my account in maybe 1%, 2% profits. I stopped and I just waited for the withdrawal. So the point to be taken from this particular statement or the experience that I mentioned to you guys is stop when you are in profits. Okay. And sometimes I did mistakes, as I mentioned. I sometimes over leveraged when I was in loss to get back the profits. Again, those mistakes, if I wouldn't have made those mistakes again, I would have, excelled in my journey a little bit. It, my journey would have been a little bit smoother. But let's come to your question again. Buffer. I don't keep buffer in my account, in my live account. I just withdraw it once I'm up 2 to 3% on my account, because trading after that becomes way too risky for me. I can lose that profits and then there will be nothing to my name. Like, I want to see that profit in my bank account or in my hand. Okay. So buffer is not really, I'm not really a big fan of it when it comes to the funded accounts. So you just make 1 to 2%, you just stop. And if you don't overtrade and over leverage, if you just take one trade a day, I think getting to this stage is really easy. It's really easy.
I have
HK118 knows it. Yeah.
I have one advice on this topic, is that if you think that you need a buffer, then you're over risking. For anyone who thinks they need an extra buffer,
That's really a good point.
They're over risking, because if you just cut your risk, then that would be your buffer. You don't need the buffer. You created it yourself by cutting the risk. And in regarding to the profits that are left with a third party, in this case the broker or the prop firm, you don't have that issue of trust with the 5ers. But not every broker out there is as trustworthy as the 5ers. So my advice is for those who are, in general, is it's better to have one bird in your hand than 10 in the air, right? We know that saying. So you want to have the profit the fastest you can in your pocket and not on that funded account. As long as you have it on the funded account, it's not yours yet. So I say cut the risk. You don't need the buffer. Cut the risk. If you think you need more space, then cut the risk, the position size, or the stop loss, whatever it is you need to be doing to create that buffer yourself. But please take the payouts. Have them in, as you say, on your name, and then you can move on. I think your advice, you have been saying this a couple of times, how you park your accounts when they are in 1 or 2%. I think you mentioned. I think that's some solid advice right there. Because
that is the only reason I've survived in prop firms, to be honest, guys. If I was greedy, if I was trying to hit the leaderboards, if I was trying to, max out my position size or whatever, I wouldn't really have secured anything. I would have been maybe broke by now. This is the only trading behavior that just saved me. I'm just saying to you guys, you just follow this thing. And in the process, just try to make mistakes that you can cover up in maybe upcoming trading sessions. Don't make that big of a mistake, then your account is gone and then you can't really trade the next day. And Rosas is saying 2% down and take it slow. That also, if I can give advice to my younger self, or when I started trading, I think being slow is okay. Being slow is fast in trading, actually. So if you try to cover that 2% by today, okay, I'm down 2%, I have to recover it. That is gonna cause you, maybe some bad decisions. You can take some bad decisions. So coming to that point, take it slow, okay? Once you see your perfect setup, then only execute the trade. Take it
Solid
slow. I
advice
think
again.
it's really okay. Just take it slow. It is the fastest way in trading, okay? I know you see some people on Instagram, they are hitting home runs. It's okay. It's okay. Let them do whatever they are doing. For me, one thing again, I will focus on this nature stopping when I'm up 2-3%. Even on my challenge, actually, when I was up, when I won the first trade, I was not trading. This is the only trading behavior that saved me, actually. That made me money, actually. I think I have made countless mistakes, but I think this only one thing saved me by just stopping when you had a win. That's it. And when you
Yeah, there's.
lost, that's
Go
also you
ahead.
need to stop. Yeah,
Yeah. No,
I
what you're
didn't
doing,
stop. Yeah,
what you're doing actually is, one is, this, there's a couple of sayings. So one of them in trading is, you want to be stopping in strength, meaning you want to stop strong the day, right? You don't want to be
Mhm.
winning, and then when you start losing, you stop. And only then, because you're always going to have that that means that always at the end of your stretch, you're going to have a couple of losses. But if you win, and you say, well, that's enough, I'm going to stop here at strength, it does something positive for your mental equity, because you feel confident, you have a good association, a good interaction with the market. Next day you come back with confidence. Not only that, but you also are the wise practice of stopping yourself when you're on streaks is, I think, is great, because that's what you're doing. You're stopping when you're in profit. And
yeah,
by exercising stopping yourself, that by inhibiting yourself, which is quite difficult for everyone, um, you're because what happens when you have these streaks, positive or negative? What happens when we have a streak of losses? Our emotions creep in. Same thing happens when we have a streak of winners. We start to thinking, I'm untouchable. Whatever I do, I win. I am King Midas. I'm gonna touch this and it's gonna turn into gold. Watch
yeah.
and
It happened
see.
with me a lot of times.
It happens with everyone,
Yeah,
overconfidence.
exactly.
And it comes with these streaks where we have positive or negative deviation in the sequence of the results we get, and you start getting overly confident, or perhaps almost triggering your tilt, your emotions. And by stopping yourself, by inhibiting yourself, you're breaking the cycle, both of them, negative and positive, which you're cutting the legs out of the process to become more emotional. So you keep yourself trading more logical, less emotional. And that's amazing. And that's why I like these advices that you were talking about, and you give regularly, about stopping at 1%, stopping at 2%, or whatever number
Yeah,
that makes sense to you, because you're stopping that possibility of becoming emotional, um, and then going to wreak havoc on the account, and perhaps even lose it. um, yeah.
that is the only thing saved to me. Again, I will say, guys, that is really the stop, man. If you took a loss, stop. If you take a win, then also just stop. Okay. I think only this one thing can, you know, put you way ahead in your journey.
Perfect. All right, we have let's take a look at HK11897 is being slow like a turtle. um, yes, if that is what if we need to do to be profitable and consistent, then I want to be a turtle. I don't care that I'm not as fast,
Yeah,
but I want to be
I want to be a
consistent.
turtle
I want to
too.
be I want to be profitable. Being fast isn't the goal. It's being profitable. If it is being, slowly, gradually moving forward, then I want to do that. If that's how profitability is going to, look like. The same thing as, trading. What's the goal in trading? It's not doing something excited. It's about applying your edge. And if applying your edge, for example, and actually it is like so, if applying your edge means so-called being boring, right? Then that's fine. And then I want to be boring because I want to be profitable. It's not about, being exciting, having the, what's going to happen as if I'm, going to hit the jackpot on every trade. That excitement I don't want. I don't need that. It's not going to help us. But having strict rules being applied over and over again, which may sound boring. I don't really particularly think they are boring. But if that's it, then I want to be like that.
I'm
Gotta
just
define our
dabbling on the
goals.
charts. Yeah.
Yes, I'm on my side as well. I was just going to look at the EU because I think we have some price actions. I'm going to switch to that. Right here, you have the H4, which has been invalidated, right? The bearish order block that previously the price used, right? This is the creation of the order block. This is the creation right there. And then it continued to go down, come back for the first retest, and then move out again. And this is the second retest, and that retest broke it, right? So the first, this is the reason why I only trade this, right? So this part of the fresh. So that's why I only trade the fresh order block. The creation, this is the retest. Let me do it with an arrow. This is the creation. This is the retest. Here, I'm still waiting until on the lower time frame it turns around, and then I have this move, which is this leg. That's the leg that I want to be getting. Let me mark it like that. That's the leg that you want to be catching. Price moving out of the retested area and targeting. In this case, it was a very beautiful move. Didn't actually, and this is against the trend, right? The trend is the impulse. Even the impulse was to the upside, and you still could have been trading. And actually, I did trade this when it happened. You can see it here on the 5-minute. This is the trade that I took, which I waited. That's from today, but this is the trade that I took, which is based on that quasi, came back to that order block, and I got it to the next level. That's it. I understood that the market, the impulse was to the upside, and there was nothing. It didn't make sense for me to be targeting something much lower, because the probability of that wasn't great, since the market was at the higher time frame. Was it was just a matter of time until the market would switch back, and I certainly don't know how long that's going to take, switch back and eventually break the structure that made me take the trade short. So that order block has been taken out right now, and it's no longer there. I should clear out everything else as well, even these. Well, actually, let me leave those for future reference. But now we have broken the level, the order block, and that's the level that was broken. So you could look back and see if the market, currently it hasn't retested yet. Go to the 5-minute. It hasn't retested that, but that's the broken line. That's the previous high, right? Not the swing high, but the second. Let me look back. Right, it's not this line wasn't the actually it's the third one. So you have the 1, 2, and then 3, which is the actual high of that swing. So the breakout was very clearly after the first one, where I had my TP. But what you want to be watching for is we already hit the 100% ATR for today. So based on that fact, we don't expect price to be going much more higher, unless we have a high impact news for today. And if we go to the economical calendar, we can see that on today we don't have any huge EU impact news, right? We do have, however, the shutdown coming to an end, soon. I don't know if they confirmed it already, but headlines were this morning in any case that they're waiting for confirmation for the shutdown, for the stop of the end of the shutdown. But that is one big event which is not scheduled that could move the market a lot. So that's something I may or may not have happened. Maybe I should check in the background to see if we already have some kind of news on that front. And while I'm checking, we did have the breakout, so I'm keen on watching if we are coming back to retest that broken line and see how the market reacts then. I don't expect price to be going much higher, but it's clear as a breakout, and these breakout can continue to go for some time. And the fact that it's at 100% ATR doesn't mean that it cannot go beyond it. 100% is the average. 50% of the time it goes beyond the average. 50% of the time it doesn't reach the average. So there is still chances, probabilities are still open for price to expand a little bit beyond the 100%, maybe 10, maybe 15, maybe up to 20%. Depends on if there is a driver or not, and the shutdown could be such a driver, or the lack of thereof, right? So checking so we're going to be looking at the price action of EU to see if what we're having so far, it's holding up quite nicely. And as you can see here, this is the 1 minute. Perhaps I should take the 5 minute. That's too small. Well, let me just leave it at the 2 minute. At the 1 minute, you can see that there's a tiny order block here. This is not this is not a setup, but you can just understand price action. It comes back to the last order block, and it holds, meaning it's holding up. It's not breaking structure. It is holding up, and I think it's a matter of time. If it continues to hold, that eventually it could have a little breakout. And I say little because of the ATR, so I don't expect fireworks. But we'll see. Maybe it will have some acceleration and continue to go higher later on. We'll have to see on that. But it's holding up quite nicely, and we still have plenty of hours, plenty of time for price to continue to go higher. And on the H1, do we have? We don't have any. This is too little. There's no information here. On the H5, there is a tiny. Not a tiny, but there's an order block there. But that's only a 5 minute. That's nothing. Okay, there's a 15 minute, but I think this is holding up quite nicely. We need more information for sure to say anything else. And on gold, let's take a look at gold. Are you looking at any particular pair, Samir?
US 30 again.
Want to go to
that similar area?
Because we have. This is Go ahead. How is the? Because we're coming near to the end. Actually, we are at the end. So after your
exactly.
US 30 setup, after your US 30, didn't reach the area, right?
No, it didn't reach it yet. I'm just waiting for it. After the stream, it is gonna happen. So yeah, let's see.
All right. Okay, so I'm gonna switch to mine to just see if there's anything else we should look or show before we close the stream. Let's take a look on the GU as well. There isn't anything that I see currently. Let me move some things in the background here. All right, so so on the H, what I do see is from daily time frame, there isn't a reason for me. There isn't a trade whatsoever. I do understand that we are reclaiming a broken level from before, so that's something that makes this line right here, this wick, and actually the ones before that as well, but especially the current one, as a fake move. The H4 newly created that would be the area of interest. And if we look back to the H2 and H1, there isn't an actual area to be trading. I think I came to the same conclusion as you did, because this is the area that I would be looking for to take a trade on GU, and it would be long, obviously, because that's what the price action is telling us. So I would be waiting for price to come back to that area, and then on the lower time frames create those reversal patterns that I trade all the time, and then take the trade long. So that's it on EU, GU, and US 30. I hope you had a wonderful time watching us today. Please do not forget to hit the like button, subscribe to the channel, make it possible to hit the 90,000 subscribers this week. Let's see if we can. It's a challenge. Let's participate in that challenge.
Let's go, guys.
That level. So without any last words, Sabir, before we go out with a bang.
That's it, guys. Thank you for participating in this live stream, and make sure you like this stream. And if you haven't subscribed it yet, make sure you subscribe it also. And one thing again, I mentioned, just stop. Winning day, losing day, whatever it is, winning trade or losing trade, actually. Just stop, okay? Don't let that get to your head. That is the advice for today. With that being said, see you guys tomorrow.
Perfect. I invite everyone for the Discord sessions we will be having later on. Just get an account, grab an account, and you can have in the dashboard the entrance to our lovely community, very supportive community of members just like you, who are working relentlessly to becoming better traders. And the more people we have in there, the better it becomes, because we help each other. So that's it. See you guys tomorrow, and have a great day. Bye-bye.
Bye, guys.